Hi there everybody, welcome to this pre-scene analysis video. Now I'll split the pre-scene into three parts. Part 1 is going to be the introduction. Part 2 is going to be the details, the manufacturing details, the operation details of the company. And part 3 is going to be financials. Why do I split it into three parts? So that it remains, understandable, it remains bite-sized for you rather than one big video for 3 hours. I like to split it up into 45 minutes or 1 hour videos so that you know that, okay, first part, after I have gone through, I have understood the introduction and the background of the company. After you are comfortable with that, only then you go to part 2. Only then you go to part 3. Now the entire pre-scene is going to be given to you in two ways. First is the PDF and second is the video. This video that you are seeing and the slides that you see on your screen are part of a full pre-scene PDF document. I will recommend you to download it and keep it with you because yes, you'll watch the videos 2 times, but you're not going to get time to keep watching the videos multiple times. Watch them 2 times, the entire set of videos 2 times for the pre-scene. Part 1, 2 and 3, watch it 2 times each. From the third time onwards, pick the PDF and read from there. If you get stuck somewhere, the video will always be available. But my recommendation is to go to the pre-scene at least 7, 8, 10 times before the date of your exam. 2 times you watch the video, the remaining times you just keep reading because I don't want you to learn anything. I want you to watch it so many times or read it so many times like it becomes your favorite movie. You remember the dialogues? Same way you'll remember the pre-scene. But keep reading it, keep it in sight, keep it in touch, keep going through it. That is the key to mastering the pre-scene, and trust me, if you know the pre-scene, half of your answer when we go to mock question writing will automatically be very easy for you and will be ready for you only from the ideas of the pre-scene. So this pre-scene analysis is presented by me, created by me with a whole lot of time, effort and hard work. I recommend you to give that same time, effort and hard work and your preparation will become very straightforward, very easy. I can guarantee that for you. If you have any questions, please reach out to us at any part of the pre-scene and we will most happily help you on the same. But the pre-scene is a very important, crucial step for this exam. Without further delay, let us start. So the first thing that we are starting with is your role, because it becomes very key to understand what your role is, what your job is before we move into any further discussions. So now you are a finance officer working within the finance department of SumTrix. Before I begin or before I go any further, it's very important to understand what this pre-scene analysis is. So first, this pre-scene analysis picks the actual CIMA pre-scene, and then in that we add our own references to E1, P1 and F1. These references that we add become key points or key topics that you bare minimum should have revised. So I always recommend everybody, when you're doing my pre-scene analysis, have a piece of paper next to you. Write down every single topic that I speak of. So if I'm speaking about, let's say, IAS 16 F1, you write it down. 1. IAS 16 F1. 2. Activity based costing. 3. Standard costing. P1. Whatever topic I mention, whatever relation I make to E1, P1 and F1, have a list with you and list down all of the topics because it will help you revise. So again, 1. Throughout the entire pre-scene, I'll keep linking to E, P and F. 2. Keep making a list of topics. A whole bunch of areas are going to be covered for you, going to be discussed for you. If you go through my pre-scene analysis very carefully, half your battle will be won. And last, this is only one part of preparation. The first part of preparation, like I always say, is good revision. through our revision course, through our revision notes, through our Fin AI, which is one of a kind. Second is this pre-scene analysis. And third, the most important, is mock writing. We do 25 mock questions for students that are on our full course, which is almost like 70 topics preparing you for the real exam. And if you've done so many mocks, so much personalized marking which we'll give you with suggested answers, with model answers, then chances of going wrong in the exam become very minimal. So to the three pillars for good preparation come down to number 1 revision, number 2 pre-scene, number 3 mock writing. I am helping you with both the pillars through this pre-scene video because I will list down important E1, P1 and F1 topics that you need to revise, and I'm explaining the company to you in detail. So sit back with full concentration, follow my explanations, and I'm sure you will find it helpful. As always, if you're on the full course, if you're signed up with us, it's going to be highly advantageous to you because every aspect of your study is controlled by us. At the right time, the right information will be provided to you. So you are the finance officer working within the finance department of SumTrix. So now you'll wonder, what is finance officer? It's a very vague term. So to further, pinpoint, the finance officer's role is quite broad. It involves short-term decision-making help, costing analysis, variance analysis, working capital analysis, budgeting, analysis. If you think of all of these topics that I spoke, they are going to be a direct relation to your E1, P1 and F1 syllabus. Which means if I want to be a good finance officer, I will naturally have to have good E1, P1 and F1 knowledge. The operational case study exam places a whole lot of attention on how well you can replicate technical knowledge. For a very simple example, let's say a scenario-based question comes up and it's around variance analysis, specifically direct material price variance. If you don't know what the direct material price variance is, not its calculations, but if you don't know what the direct material price variance is, how are you even going to start to write the answer? So the first place we recommend for everybody is revision, and anybody on our course will have started through revision using our material, which pinpoints exactly the knowledge you are supposed to have. So again, coming back, all of these roles of a finance officer are varying and they bring your knowledge from E1, P1 and F1. So to be a good finance officer, E1, P1, F1 knowledge will be key. It's the starting point. You are principally involved in the preparation of management accounting information and providing information to managers. As we very well know, P1 is going to be the foundational pillar of this exam. P1 is going to be your majorly tested area in this exam. So P1 revision again becomes key, because if you don't know the concepts, how will you help them in management accounting? How will you help them make decisions? So importance of revision coming up. At times, you are also expected to assist with the preparation of the financial statements and answer queries regarding financial reporting. So in the paragraph above, they told you about P1. In this paragraph, they're telling you about F1. This duty links mainly to F1 if you do not have your IAS knowledge, taxation knowledge. How are you going to answer questions? So these become key revision areas, and F1 is also important. If I were to rate it in terms of importance, I would say first P1 revision, then F1 revision, and then E1 revision. Remember, overall, key aspects of E1, P1 and F1 are to be known. What are these key aspects? The topics which I list through this pre-scene analysis are your key aspects which we have to be clear about. And they're coming up one by one by one. So this was your role. Next, we are coming to introduction. So SumTrix is a company that manufactures and sells freestyle and touring skis, which are a specific type of ski. So we sell two types of skis. Actually manufacture and sell two types of skis, freestyle and touring. We also sell ski accessories. So very clearly, what do I analyze from this? This is a vertically integrated organization where we first design, then we manufacture, and then we sell it. So now when you're doing your E1, P1 and F1 revision, you got to keep in mind that, okay, I am working for SumTrix, which is a company that designs, manufactures and sells. So you need to keep in mind the manufacturing related concepts, topics while you are doing your revision, because you are working for a company that is a manufacturer. So from E1, I'm now thinking of, because we manufacture and sell, finance function, the role of the finance function becomes very important. This is in your E1 syllabus, so you should be writing down 1. Role of finance function. 2. The ski accessories must also be marketed and positioned correctly. So your marketing concepts come into the picture. Because you are designing, you are manufacturing, and then you are selling, lot of stakeholders are involved. Customers, suppliers, employees, all of these are going to be involved. So stakeholder management from E1 becomes important. Because you are manufacturing, obviously your costing, because you want to control your costs. So different costing techniques. Deeper into the pre-scene, we will be discussing exactly what costing techniques SumTrix has. What are the benefits of that technique? What are the benefits of moving to new techniques? But over here, because I am finding it relevant, I am just listing it out for you. So again, because we are manufacturing, your variance analysis comes into the picture. A very important theme is going to be seasonality and seasonal demand, which is part of your time series analysis in P1. This is going to be a key topic because of the nature of the business. You are a company which sells skis. Skis are only used in the winter season when there is snow. So obviously there is going to be seasonal demand, and the seasonal factor needs to be considered. So this was my analysis from only these 2 lines. This way we will be detailing everything for you one by one by one. Now SumTrix is based in Reeland, a country in Northern Europe. With the R dollar as its currency, Reeland has a strong ski culture. So they're telling you that we are in a fictional country called Reeland. It's in Northern Europe and it has a strong ski culture. Now this very clearly tells me that I am in a good place. Because if I consider my pastel analysis, external market analysis, it's very clear that the economic environment, the social environment are supportive. Because Northern Europe technically is a developed country, developed section. So people will have the money, the interest, the power to spend on sports like ski. Secondly, socially it's supported because it already has a strong ski culture. So SumTrix is in a good place and it's supported by good economic, good social factors already. This is your pastel from E1. Now because Reeland has its own currency, SumTrix may face foreign exchange issues if we import materials. If you buy from another country, sell in another country, or if you buy from another country, sell in Reeland itself, this brings out risk. Again, ski culture also means demand is seasonal. So your seasonality, forecasting, budgeting becomes important from P1. See, right now I'm giving you broader topics because we are discussing broader concepts. Deeper, I will give you specific topics as well. Moving on, history of the company. SumTrix was founded 10 years ago by 3 friends, Elena, Felix and Julian. So 3 friends came together and found this company. It's been in the market for 10 years. They met through their love for freestyle skiing or freestyle riding as it's known in the sport, a ski discipline that incorporates acrobatics. So freestyle skiing is a type of skiing which incorporates acrobatics. So like jumps, stuff like that. So 3 friends came together 10 years ago, found a company because of their love for freestyle skiing. Very clearly, this highlights entrepreneurship at the beginning because it's passion that brought these 3 together and they started this business. So this ties into your E1 concept of organizational purpose, culture of the organization. Their focus on freestyle skiing also links to market positioning. Because of their background in freestyle skiing, we are only selling freestyle skis and touring skis. So this is a very niche area and a niche sport which we are targeting. So overall, we know that a business can only and only survive for 10 years. 10 years is still a decade. Because it has garnered a set of loyal customers, people are liking their products, people are liking their brand, and this is all relating to goodwill. So you already have goodwill of 10 years with you because you have been in the market for this period, and this enables you to, let's say, launch new skis and people will still be interested because for 10 years you have been strong in this market. Felix and Julian initially met at university 16 years ago where they studied engineering. So Felix and Julian have an engineering background. At this time, they both competed in freestyle skiing competitions at the amateur level. It was one of these competitions where Felix and Julian met Elena, a professional freestyle rider. So Felix and Julian have engineering background. They met Elena, who is a professional freestyle rider. So all of them have freestyle skiing experience. Plus Felix and Julian are also engineers. This is important to know because these are the people who started the business, so their background becomes a very important consideration. In 2015, having remained good friends, Felix, Julian and Elena decided to combine their engineering expertise with their love of freestyle skiing to create their own freestyle ski brand that put rider experience first. Please remember, this is one of the core values of your business, rider experience first. You need to always keep this in your mind to make sure whenever you launch something, whenever you speak about your business, your product, you keep in mind that, okay, I have to prioritize rider experience. See, remember this detailed pre-scene analysis is helping you understand the company, is helping you identify E1, P1, F1 topics, but it's also giving you key ideas which you can carry with you and then replicate in the model, in the mock questions that you practice with me, so that you have a habit of incorporating this pre-scene information within your answers in the final exam as well. See, the mock questions that we do, why do we do them? Because obviously you can get to understand the exam pattern, style in a timed environment, get marks, learn, but also because you can try and test ideas from the pre-scene within your answers, and that adds value because remember, you are a finance officer at SumTrix. So the more information of SumTrix that you incorporate within your answers, the more marks you get. because you are working at this company. So it should feel like you are working at this company in your answers, and that is why writing is very important. That is why this pre-scene analysis is very important. That is why all three pillars are important. Just pre-scene will not help. So we are a company that puts rider experience first. Their goal was simple yet ambitious: to create high quality skis that would elevate performance and improve experience of freestyle enthusiasts. Again, these are our goals: high quality, elevate performance, rider experience. This is all key. So the fact that founders met at university means that these are entrepreneurs who are willing to do something, change something. So this is guiding the organizational's purpose and culture, which is shaped by founders' value. This is from your E1. The organizational purpose and culture is going to be shaped by founders' values. Next, relevant costing and decision models are to be discussed here when deciding to launch a new brand. Obviously, when you're deciding something to launch anything new, even in the future, you want to have a comparison of what if you make in-house, or what if you buy it from outside and rebrand it and sell it. So your opportunity cost, make or buy decisions under the relevant costing concept become important for this kind of business, because it's a new business which is starting, and often companies make this distinction, let's put it that way. And even further, if you launch a new product, a new section, this is of consideration. Now, in the early years of the company, it will be very important for the company to raise finance. So sources of short-term capital, long-term capital, short-term debt, long-term debt become important, which is from your F1 syllabus, because the business is only 10 years old. It's going to need money for continued operations. They named the company SumTrix, combining summit and tricks, because freestyle skiing involves tricks, evoking a sense of adventure and playfulness. Operating out of a small workshop in the mountain town of Gornergrattan, the friends handmade their first prototypes, like any startup business does. Their priority was to craft skis with flexibility and durability that could cater to the demands of freestyle skiing, offering excellent control and smooth landings on jumps, rails, and other terrain park features. So again, rider experience was key. Julian was also a keen artist and was responsible for the ski's unique look and colorful designs. So Julian was responsible for the look. With a focus on craftsmanship and design, the company quickly gained a loyal following among local freestyle riders who loved the ski's performance and the trendy designs. So the name SumTrix shows deliberate brand positioning. You position your brand so that it combines summit and tricks. So this relates to your marketing mix, the 4 P's of the marketing mix. Over here we are speaking about product positioning. And also we wanted it to be different, so this is a differentiation strategy. Because the first products were handmade, this highlights the importance of cost classification. Designing skis with specific performance features ties into standard costing and variance analysis. For any new business, standard costing is the best, easiest way to go. Deeper in the pre-scene, we'll discuss which costing system does SumTrix really operate on. Now, early product development also reflects your life cycle costing, where there will be high development costs at the beginning. For F1, we are looking at small workshop, means initially invested in small property, plant or equipment, whatever. So your IS 16 comes into the picture. I'm also thinking of IS 2, becomes relevant because handmade skis involve raw material, labor, overall costs, which must be accounted for carefully. So this is a very initial mention of IS 16 and IS 2. I'll give you details later on as well. But just showing you how different topics and thought processes are being brought to you. We'll continue to do this, but being aware that, okay, if you're doing this by yourself, naturally these topics are not going to come to you. We are registered tuition providers, hold the Global Pass Rate Excellence Award for 3 years in a row, been tutoring for years now, thousands of students, so we know what needs to be focused on. So now your job becomes simple to list down the topics we are speaking of and making sure that those topics you are aware of. Second, understanding the company with me. And third, most important, taking these ideas and making sure you replicate it when the time comes, when we write mocks. Because if you're not using any of these knowledge, then entire analysis we are doing over here is gone to waste. So make sure you take these ideas and use it in mock questions, and I will give you ample practice in mock question writing when we get there. So over the next few years, SumTrix grew its customer base substantially, capitalizing on its growing reputation as a high-quality freestyle ski manufacturer. The original artwork was extremely popular and quickly became a unique selling point of the ski range. SumTrix began to sell skis more widely throughout Europe. So your foreign exchange situation comes into the picture over here, which I've already spoken about above. Because you are selling throughout Europe now, not only in Reland. Your reputation is good, you became popular, your unique selling point is your artwork or the design of your skis. Remember this. And you sell widely throughout Europe. 2 years ago, the founders decided to capitalize on this growth and expand into the touring ski market. First, we only used to sell one type of ski, freestyle. Now, for 8 years, we sold only freestyle. For the last 2 years, we are selling touring skis also. New product. So touring skis are used by skiers who want to explore remote mountain areas away from the groomed pistes, which means they are away from the original skiing slopes. They are remote. SumTrix range of touring skis was a product of much research and development. The engineering backgrounds of Julian and Felix were invaluable in creating a range of touring skis that were lightweight but strong and reliable in tough conditions. So again, my core values remain the same. Rider experience, high quality, delivering to what the customer actually wants. Building on a strong brand. 8 years, my brand had already been built. Owning largely to its unique designs and excellent craftsmanship, SumTrix touring ski range quickly gained traction in the market. So firstly, growth across Europe. This showcases your globalization, international expansion. Again, pastel analysis coming to the picture. We developed a new product as well over here. Because first only freestyle, now touring skis as well. So product development is something that the business is doing. So moving into the future, maybe in 1 year's time or maybe in this year itself, because already we have a good goodwill, good fan base, we might consider launching a new product. And this is very much with the link in the business because the business has been launching products in the past. P1, entering the touring ski market required investment appraisal and decision making. Obviously, you would have done forecasting, budgeting, using, let's say, sensitivity analysis, decision trees from your P1 syllabus before you made this decision of entering into a new product. This can be suggested. Let's say we are launching a new type of product in this year. They'll ask you to evaluate a decision tree. You don't have to draw it, but you have to evaluate it. So if you don't have that P1 knowledge, how are you going to do that? So you should be writing down decision tree, sensitivity analysis in your topic list. Now again, this was an introduction of a new product. So your sales mix variance comes into the picture. Up until now you were only selling one product. Now you're selling two products with different ranges. So naturally your sales mix variance comes into the picture, which product you are selling more, which product you are selling less, why. All of this analysis now begins. Variance analysis. So again, for F1 we are mainly looking at entire Europe, so foreign currency risk coming into the picture. Because you are selling in different parts of Europe now, managing your receivables, managing your payables become very important, because this becomes difficult if you have international customers, international suppliers now. So your working capital cycle also comes into the picture because of the nature of this business. Now coming to the current situation. See, if you just look at it, up until now, we did introduction, we did your role, then we did an introduction to the business, then we started with the business's details. Now to the current situation right now. SumTrix manufactures all of its skis. This is not a buy. You don't buy it, rebrand it and then sell it. You are actually making your skis. Very important. At the company's own production facility, which is located on the outskirts of Gornergrattan, close to the original workshop. So we have a production facility. Near to the production facility is the goods inward warehouse, outward warehouse and the head office. So pretty much there are 4 buildings: production facility, inwards warehouse, outward warehouse and head office. SumTrix's freestyle and touring ranges each have 3 different models, and each is available in different sizes. So pretty much there are 6 products, 3 under freestyle, 3 under touring, and then further divided in terms of sizes. Both ranges are sold throughout Europe via a network of retailers. You are selling to retailers, and through the company's own website as well. So you have retailers plus website. SumTrix also manufactures custom skis, freestyle and touring skis designed specifically for an individual skier. So you have your original 3 products, 3 freestyle, 3 touring. You also manufacture custom skis if somebody places an order that, okay, I want this size, this specification, this, that, you also do that. Let's start from the top analysis. The setup of facilities links to operations and supply chain management. If your supply chain is broken, your inwards warehouse will be empty, your production facility will be empty, your outward will be empty, your retailers will be unhappy. Supply chain management becomes key. Because we spoke about marketing mix, we had positioned ourselves in only freestyle and touring ski market, which is a niche. Now we'll speak about place, because we are selling via network of retailers and we are selling via our own website as well. Now because you have so many different models, so many different sizes, activity-based costing could be suggested, because overheads need to be traced to different products, different models. If you're not able to trace overheads properly, do your costing properly, then it's going to be an issue to price your products well. So because of the nature of this product, activity-based costing can be considered. What is our current costing situation? It's given deeper into the pre-scene. We'll discuss it again over there at length. Also, we have our own production facility, so property, plant and equipment, depreciation, revaluation, selling of assets, IFRS 5, all of this comes into the picture over here because you have your own production facility. How, you may ask me? They'll tell you that we are adding to the production facility. How do we record this new asset? We are selling this old asset. We are revaluing this old asset. So all of this becomes important because of this nature that we have just discussed. Next, all custom skis are sold through the company's website. So if you want a custom order, it's on the website only. SumTrix also sells through its website a small range of ski accessories. Currently poles, helmets, goggles, gloves, which are bought in unbranded from trusted suppliers. SumTrix add its own branding to all of the ski accessories before sale. So with the skis, we are actually manufacturing them. With the accessories, we are buying them. So maybe it was cheaper to buy than to make, and that is why we made this decision. Maybe we now expand into actually manufacturing these products this year. That could be a scenario which comes up. The company is still owned by 3 founders, Elena, Felix, Julian. The company's latest financial statements for the year ended 30th June show a revenue of 14 million, gross margin of 39%, and a profit before tax margin of 5.7%. So healthy numbers. If I want to analyze, we are selling through our website, so your digital marketing comes into the picture over here. Different types of marketing comes into the picture over here. Again, with accessories, we already discussed make or buy. Now, selling across different categories makes contribution analysis, CVP, cost volume profit analysis, very important, because you need to understand the margins that every different product is giving you, because only then you can push a certain product, you can try to improve on a certain product. This becomes key. Now, because you are buying in accessories, your inventory valuation and cost of sales under IS2 become important, since costs include purchase plus rebranding expenses. So IS2 will become important for us because we are buying plus we are making, so handling of the inventory becomes a key discussion for us. SumTrix's founders are very aware that they operate in a marketplace dominated by a few large companies. Their strategy therefore remains to specialize in certain types of skis where they believe they can grow sales. So we know from my extra industry analysis, if you've already done it, that this ski market is dominated by a few large companies. It's kind of, few companies controlling the market, because this is not an easy market to master in. There are companies since many years which have a strong foothold. So what SumTrix is doing is specialize in your freestyle skis, in your touring skis, in custom skis, so that you can achieve growth in these niche segments. Influencers use SumTrix's freestyle and touring skis, and their social media presence has helped fuel demand. So we are using digital marketing methods. We are using new marketing methods. Freestyle skis still account for the majority of sales. However, the founders are focused on increasing their share of the touring ski market. Other types of skis are described ahead. So we are, let's say, focused on growth, focused on increasing our share in the touring ski market. So it becomes very important to make sure that, okay, the business is in this position, but we need to know that, okay, we are looking to grow, we are looking to move ahead. So overall, we are using digital marketing, promotional strategies like, influencers and social media. Now, the decision to focus resources on touring skis highlights limiting factor analysis and optimal product mix, because we will obviously have scarce resources, scarce finances, scarce inputs. So how do we use them best to make sure that we are growing in the touring ski market is a very important consideration. So your limiting factor analysis becomes key over here. There can be very easily a scenario where they tell you that, okay, now we are looking to move ahead in the touring ski market, but this is a limiting factor. Which product should we prioritize? If you don't know your throughput accounting, limiting factor analysis, you won't be able to answer. Next, article from Skiing Today. So after knowing a little bit about the company, we are now to an article from Skiing Today. An article has been published, and this has been showed as part of the pre-scene, so we'll obviously analyze it. Now, whether you are an experienced skier or a beginner, to enjoy the mountain to the maximum, it is important to use the correct skis for your correct skiing style, the mountain terrain and the snow conditions. This short guide explores the main types of skis and their unique features. Remember, we are only selling freestyle skis and touring skis. Touring skis for the past 2 years only. All mountain skis is the first category. Most popular and versatile type. They perform well in different conditions. They are medium width for balance and stability. It's best for recreational skiers wanting all-round skis without specialized gear. So this is not specialized, it's medium width, performs in different conditions. Next, there is powder skis. This is designed for deep, soft snow. This is wider to float on the powder, and they have a rocker profile for maneuverability. Raised tips and tails so that they can be maneuvered easily within that deep snow. Third, there is carving skis. These are built for precise turns on groomed slopes. So on skiing slopes, if you're going to make precise turns, a carving ski is best. This is narrower with pronounced side cuts for easier turning. Suited for skiers who want speed with control. So all mountain is all situations. Powder is for deep, soft snow. It's wider. Carving is for precise turns, who want speed and control, and it's narrower. Freestyle skis is what my company does. So this is for riders in ski parks. So rails or half pipes or jumps or acrobatics, we already know this. They are lightweight and they are flexible. They have a twin tip, curved tip and tail. You can see the image over here just for reference. Those who are into skiing, this will make sense to you already. They are durable to withstand landings and contact with obstacles. Touring skis now. So they are made for off-piste skiing, obviously in areas where not everybody goes. They are lightweight for climbing uphill. Specialized bindings allow heel to lift when ascending. And the last is youth skis. These are designed for children, shorter length, help younger skiers. So if I overall want to make an analysis, a very quick one, for all mountain skis, this is market segmentation. It's generally for recreational skiers and it has a broader positioning. Over here, there is going to be lower margins but higher volume because they are more generic. For powder skis, this is a niche market again. The limiting factor analysis will come into the picture over here a little bit. Because this is a very niche product. Carving skis is again differentiation strategy, precision performance. If you want precision performance, speed, turning, you'll go for a carving ski. For a very specific product like this one, activity-based costing would make sense. So this is just, an overall view. Let's say tomorrow they tell you, okay, touring skis, we were going to expand, but now we are happy to move to carving skis. You'll already have it in your mind, okay, this is a differentiated product, it's for specific people, and activity-based costing was spoken about as a suggestion in the pre-scene analysis. You can include this within your answer, get your free marks, free credit, and move on. Next, we have freestyle skis. Innovation in value. They are twin tip and they are flexible designs for acrobatics. So this is just this is the area of focus for us as a business. Touring skis is market development for us. We are a new type of market that we are exploring. Forecasting will be key. Again, they've given a very clear hint in the pre-scene that we are looking to expand our touring skis presence. So property, plant and equipment comes into the picture over here because we might be looking to expand, might be looking to look forward. So this was just an article given as part of the pre-scene telling you the different types of skis that exist. Remember, our focus is freestyle and touring. Deeper on, they start to speak about the industry. First, we are speaking about the global market. So remember, now this is whole industry overview. Earlier we were speaking about the company, then we spoke about the different types of skis. Now we are speaking about the industry. We're doing some industry analysis as part of this pre-scene that they have given. But those who are studying with me obviously would have already done my extra industry background, industry analysis before starting the pre-scene. So you already have a bird's eye view of what the market is like. But this will also provide a good, let's say, step into the overall market. Based on our dollars, the global ski gear and equipment market was worth around 1.79 billion in revenue, growing at 3.7%. So this is a good indication that, okay, we as a company are part of a market that is growing. Europe, which includes Reland, is the second largest market with revenue at 0.5 billion. You are part of this market. SumTrix has approximately 2.8% of the market in Europe in terms of revenue. So, okay, we are an important player in entire Europe. So, if you look at the pie chart given to us, you'll see major market is North America. Then comes Europe, then comes Asia Pacific, then South America, and then the Middle East and Africa. Through my industry analysis, it's very clear, and because I'm looking at this diagram, it's very clear that the major growth is going to come in the Asia Pacific and in the Middle East section. But North America and Europe are historically the two strongest markets for skiing. So expansion, geographical expansion could take place into high growing countries like Asia Pacific, Middle East, or into already established markets of North America and Europe. So just a quick analysis of everything that I spoke has been listed down over here. The market is growing, the market is moving in the right direction. What we need to see overall that, okay, you are a key player in this market, and if I look at P1, your market share at 2.8% is a key performance metric. It could be useful for variance reporting against targets. Budgeting must reflect realistic growth because already 3.7% is what the market is going to grow with. So your growth has to be in line with market growth, if not more, because you have already chosen your niche, freestyle and touring skis. So overall, this market is growing. It's a large market. There are going to be lots of opportunities. Becomes very important for a business like SumTrix to be aware of its situation and its external situation, which we analyzed over here, so that it can expand, because that is what our outlook is. First, we did the whole market. Now the European market, in which currently we are a player. The European market is dominated by a few large companies, with 75% of the ski gear and equipment manufactured by 5 large global brands. We already know this. Major players are having major chunks of the market. The other 25% is made by much smaller brands such as SumTrix, which typically focus on a type of ski or a specific geographical market. So we focus on Europe, and we focus on freestyle skis and touring skis to differentiate ourselves. If you look at the European ski gear and equipment market, majority of the market is made up of skis and poles. Next comes ski boots. Next comes clothing, and next comes protective gear. So maybe to continue expanding, to continue showing a positive growth rate, it might be time that we start manufacturing our own accessories like boots, clothing, gear, if we can forecast a good, strong, heavy margin rather than buying it like we are currently doing so. So this analysis tells me that, okay, I am focusing only on 55% of the market, which is skis and poles. The other parts I am selling them, but I'm buying them and selling them. It's a big chunk of the market. If you total it, it's 25 plus 15, 40 plus 5, 45% of the market, apart from skis and poles. So this is an area that can be focused on. We already know that protective gear includes ski helmets, goggles, other protection worn on the mountain. Clothing includes ski jackets, base layers, gloves, and all other clothing. Currently, some accessories we buy and then we sell can be an area of expansion because of how large the market is. So again, if I'm looking at this analysis that we did, 75% of the market is controlled by 5 global brands, showing an oligopoly structure, which means major market controlled by few players. If you look at the marketing mix, which is very important for us, skis and poles dominate at 55%, which is our key product. Very important is going to be your sales mix variances, your margin analysis, because you want to know which product is selling how much, where the growth is. So becomes important. Another important discussion is break-even charts in this case, because skis are core, but reliance on one category increases your operational risk. If resources are limited, management must weigh product premium producing skis versus lower volume accessories, because you're still buying them, then branding them, and then selling them, so it's taking time. So there might be a situation where a break-even chart is given to you and they tell you that, okay, there is a conflict between two of our key products, or let's say, and a new product is being introduced. How should we produce our products, or what does this break-even chart speak of? They'll give you the chart. You will be expected to read it. So your P1 knowledge of break-even charts becomes important. Remember, you are in a heavily consolidated market, meaning SumTrix must exploit its niche in freestyle or touring skis while managing your cost structures carefully, because you are in a market where major players are dominating the market. You need to keep doing different things, innovative things, while controlling your costs to survive. Next, market dynamics for the ski gear and equipment industry. Now, the main drivers of market dynamics are, first, climate change and the drive for sustainability. Sorry. The snowy season is extremely important to the ski industry. Obviously, seasonal factor. As global temperatures rise, it is harder to predict snowfall, resulting in shorter ski seasons. Snowmaking technology is used increasingly to ensure that there is snow to ski on. Resorts are investing in solar and wind energy to power lifts and other facilities on the mountain, and producers are striving to use more sustainable material. So climate change threatens the ski industry with shorter, unpredictable seasons, forcing adaptation through snowmaking, renewable energy, and sustainable materials. That is my summary of this. So from E1, this links to your corporate social responsibility. Sustainability, corporate social responsibility becomes an important consideration over here. At P1, it raises budgeting, cost behavior, risk analysis challenges around sustainability investments. If you invest, but let's say you are not able to maintain your costs, becomes a problem. So strong budgeting is key. From F1, it connects to impairment of assets, integrated reporting, and your impact on cash flow forecasting, because everything is becoming unpredictable. So the main driver for market dynamic, number 1 is climate change and sustainability. Number 2 is globalization of winter sports. Now, whilst North America and Europe remain dominant markets, skiing is also becoming popular in Asia Pacific, South America, Middle East and Africa. These are the growing segments. I have already spoken about this. So from E1, this speaks about knowing your external market, your pestel, knowing your global strategy. From P1, again, it focuses on forecasting because you need to forecast about a particular market's demand before you invest. From F1, your exchange rate risk, your working capital management because of international operations, all of this comes into the picture. So first aspect which is defining this market was climate change and sustainability. Second aspect is growth areas such as Asia Pacific, South America, Middle East to be focused on. Third aspect is role of influencers and social media. Now, influencers on social media platforms play an important role in promoting skiing as a cool activity, often showcasing the latest brands and equipment. So from E1, your marketing mix, your marketing techniques, your promotion techniques come into the picture. From P1, again, your performance analysis of marketing spend, you're spending on marketing, but how well is it performing? From F1, it brings your brand as an intangible asset. Over here, because of these influencers, your brand is becoming your intangible asset. Expansion of online retail channels. Fourth, so consumers have increased online access to compare brands before purchasing equipment, having your own website. We already have our own website at SumTrix. We know this. But how are we using the website? How are we updating, upgrading the website will become very important. So again, P1, we are speaking about pricing, sales forecasting, important over here because everybody wants online. You have your website. How are you using the data? Your big data analysis, data analytics becomes very important over here because more and more people are coming to your website searching for skis. But what are you doing to serve them in a better way? That's what will define your sales in this market. That is what we are discussing. Next, popularity of skiing and disposable incomes. So the increasing popularity of skiing is a way to maintain physical fitness. Media coverage has helped promote events such as Winter Olympics, World Cup competitions, so more people are getting inspired. Although still considered a luxury activity, increasing disposable incomes over the world means people have more money to invest in winter sports. So from E1, again, external market analysis. People need money, people need social awareness to invest in skis. In P1, again, we are speaking about forecasting because now disposable incomes are rising. So how are we forecasting? What forecasting techniques are we using to make sure that we have enough capacity when the demand rises? Last is technology. So technology, because innovations in skis and ski gear design as well as in ski resort operations has enhanced performance, safety and user experience to a broader customer base. So overall, there are 6 key factors, if I'm not wrong: climate change, sustainability, globalization of winter sports, social media influencers, online retail channels, disposable incomes rising, and technology. These 6 key factors you have to keep in mind because they have told us specifically that because of these 6 factors, the market for skis is growing. The market for skis is moving in the right direction. So what is my company doing? Deeper on in the pre-scene, they have told us about my companies, they will tell us about our operations, our directors. So we need to be aware that, okay, how are these 6 aspects being incorporated within my business, because these 6 aspects are what is leading the growth in this industry. So that was part 1, only part 1. You can see the value that we deliver. Be very comfortable with the industry analysis, with the pre-scene part 1. Once you are comfortable with this, Then move on to part 2 and part 3. Don't be in a hurry. Carefully go through part 1, understand the introduction of the company, understand the E1, P1, F1 topics which I have listed down, consolidate your list, then move to part 2, do the same, then move to part 3, do the same. At the end, for our students, we will also give you the topic list created by us to help you focus on these topics before we take you to mock questions, where we will be personally telling you what is good, what is bad in your answers, how to improve. This is what will train you to the exam. Again, 3 pillars: revision, which I'm helping you narrow down on because of these topics in the pre-scene. Then pre-scene analysis, which I'm presenting for you. And third, taking you to mock questions, because that is key. This was part 1. Be comfortable, and then we'll go to part 2. Thank you. Welcome to part 2 of your pre-scene analysis now. So in part 1, I was very clear to lay out the reasons for doing such a good, interactive, detailed pre-scene analysis. The first reason was obviously to help you understand your company, because all the questions are going to be based around this company. When you do mocks with us also, they are exactly like the exam, and they are exactly mimicking the exam, so you will learn from that experience, but you need pre-scene knowledge. Second, to highlight important E1, P1, F1 areas, which I'm doing, and I will give you a full list of important topics from the pre-scene after we finish this pre-scene analysis, so don't worry about that. And third, to give you ideas. Why am I making all of these discussions? So there are ideas ready in your mind which you can then use as practice in our mock questions, so that you build a habit and then can then use it in the final exam as well, because that will give you integration marks. The more you speak about your company, the more you include details about your company, the more marks we get in the exam. So becomes very clear that the pre-scene is a very important tool. Students only doing this pre-scene analysis, we highly recommend doing the mocks as many as possible, marked, because with every mock that you do with us, we will mark it. We will tell you what is good, what is bad, what is not good, where you scored your marks, where you didn't score your marks, so that we can improve. And without writing practice, we have not seen good pass rates. Just doing the pre-scene, revising the topics is only one part. If you actually don't practice mocks, then we don't see good improvement within student writing eventually in the exam. So we recommend to do as many mocks. For my students, we have 25 mock questions at FinTutors. So a whole lot of topics, a whole lot of practice will be provided to you, and we do the most amount of mock practice that any tuition provider offers. Why? Because we know that is where the make or break learning happens. So okay, continuing the FinTutors part 2, pre-scene analysis. Up until now, we learned a little bit about the company, the intro of the company, we learned about the market, we learned about the overall market. Now coming back to our company, extract from the SumTrix website. So they're telling you that from the website we have picked up an extract which will tell us about our company. So at SumTrix, we are committed to crafting high performance skis that elevate the riders or skiers' experience while respecting the natural environment. So remember, this is our core competency. We are committed to crafting high performance skis to better experience. We are already clear about this. We know this from the start. We believe that protecting the beauty of our natural environment is just as important as the thrill of riding. We continuously strive to source sustainable materials and to improve the sustainability of our production process. So a new core, let's say, skill, a core value of our company is coming up, which is sustainability in procurement, which will obviously be costly, plus sustainability in production process, which is our differentiation, which is our innovation. Our passion for innovation and adventure drives us to design skis that seamlessly connect the rider or the skier with the mountain, empowering freedom and creativity. Our mission is to inspire riders and skiers to push boundaries. Our skis are built for performance and are a testament to our responsibility towards a more sustainable nature. So high performance, high quality, good experience, sustainably sourced input, sustainability in the production process, these are our core values. You need to be clear of them because these are my core values discussed under E1. Again, corporate social responsibility coming up into the picture over here because we are responsible in our sourcing. We are responsible for the environment in our production process. But always the discussion comes up about cost versus sustainability. Yes, you can be sustainable, but you need to be very aware of the costs. So a robust costing system, a robust budgeting system will be very important for our business because of the nature of our business. A very important topic over here is key performance indicators as well. Sustainability, because we are giving it so much importance, could turn out to be a key performance indicator, a KPI for our business. KPIs is in P1, it's your financial KPIs, non-financial KPIs, both will need to be considered over here. Moving on the website itself, there is an extract on our products. We already know we make two kinds of products, three under each, your freestyle skis and your touring skis. So as we continuously strive to improve and develop our skis to allow the rider or skier to be more reactive and agile, we are now on the third iteration of our freestyle range and already working on the second iteration of our touring range. So third, let's say, upgrade of our freestyle range, third variant, and second upgrade, second variant of our touring range is coming up. So third freestyle range already launched, second touring range is being worked on, so it will launch. So remember, it will launch. Your capacity is already less because you're already working on something and it's going to launch, so there are committed costs which have already been incurred. All of our freestyle and touring skis are lighter than competitor brands because we focus on quality, which allows you to ride or ski for longer, and our unique artwork allows you to stand out from the crowd. All our freestyle and touring models are available in a range of sizes. So remember, we are in a product life cycle stage where growth can be seen. We are in the growth stage because new variants are coming up. Why? Because there is growth, there is demand. Same way, if I look at P1, quality costing comes to my mind. Why? Because positioning skis as lighter and more durable means SumTrix must track your prevention costs, your appraisal costs, versus your external failure or internal failure costs to sustain your quality advantage. If you are investing in prevention, appraisal, your failure costs are going to be low. This is an important discussion. Again, throughput accounting comes into the picture over here because we are already limited on capacity, because we are already working on the second redesign of our touring range. So first, speaking about freestyle. Freestyle skiing combines skiing with acrobatics and uses skis that are shorter and lighter than all mountain skis. Our skis are designed and made to ski both forwards and backwards with twin tips to help you land on park terrain features, like if there are pipes or if you want to go over some obstacle or if you want to do some acrobatics. Our skis will allow for that. Our freestyle skis can be used for skiing off ramps, Mogul skiing, where you descend the mountain over man-made bumps in the snow. Ski cross, half pipe or slope style. This involves skiing an obstacle course. So our freestyle skis can be used for three major areas or let's say regions. Again, this is your market segmentation. You need to know this so that you can target your audience correctly. Those who are interested in skiing off ramps, you target them accordingly. Mogul skiing, you target them accordingly. So this segmentation is important to help me target my customers in a better way, because this is a very, very, very niche area. Now, very important over here becomes total quality management and quality costs again, because if there is anything that goes wrong with the ski, there are huge chances of this person who is skiing getting injured or leading to fatalities as well, which will be a huge reputation blow for us. So total quality in our production, total quality in our input materials, and control of quality costs becomes a very important aspect for my business. P1, I'm speaking about joint costing now, joint product costing. Because many freestyle skis may share the same materials or processes with other ranges before being customized. Let's say all the skis that we make, freestyle and touring, start with the same process, for example, and then they split off. So joint product costing and its knowledge becomes an important consideration from P1 over here. Because we are in the manufacturing situation, your variance analysis, relevant costing always will be an important consideration, because with manufacturing comes variances. We have three models for our freestyle skis. First one is Summit Glide. The Summit Glide is designed and built for those who are just starting to venture into freestyle skiing. It is smooth and light. The beginner ski is shorter, more flexible, and has a wider waist. The thinnest part of the ski directly under the feet to make turning the ski easier. It's for optimum control and enjoyment. So majorly, Summit Glide is for those who are starting freestyle skiing. Summit Flow we have is an intermediate ski, perfect for riders who are advancing, more versatility. The Summit Flow is longer, stiffer, narrower waist for more stability and control. Last we have Summit Force. This is for advanced riders. It delivers power and precision. It is longer and stiffer again than the intermediate ski with a still narrower waist. It can tackle any challenge with confidence. So you have three major types: Summit Glide for people who are starting, Flow for intermediate, Force for advanced. Again, total quality management from E1 becomes key, because we have different products. From P1, your mix variances comes into the picture, because we want to know which products is selling the most, why is it selling the most, what are the sales characteristics, all of which the sales mix variance will tell you. Now also, this could be a situation where the multi-product break-even chart comes into the picture. Charts are a major thing which is tested in this exam, especially LPP, multi-product break-even charts, simple break-even charts. How do they test them, you'll ask me? Again, we will be doing mock questions on them when the time comes, to test you, to show you, to guide you. Yes, that's coming. But just because we are discussing for the sake of discussion, it becomes very important for you to be able to read a chart, because they'll tell you that, okay, we have these three products. I'm introducing now Summit X, for example, a new product altogether. And they'll show you the break-even chart. You'll have to read, okay, where is it starting from? What was the original line, original break-even point? What is the new line, the new break-even point? You should be able to read all of that. That is why this pre-scene analysis becomes ever so important, because it's guiding you from the very start on what to focus on, how to focus on. Next, to our touring range. So ski touring involves skiing off-piste, where there are no lifts to ascend the mountain. Therefore, you have to make your own way up. The attraction is a love for the outdoors and being able to ski where nobody else has, so it's more adventurous. Our touring skis have specific design features and are lighter than all mountain skis. The bindings have a heel release to enable you to walk uphill. Ski skins also help you to grip the snow. So again, this is for a specific reason. Our models are Peak Glide. So the Peak Glide is those for who are starting to explore the mountain. It is lightweight, easy. Peak Rise. The Peak Rise is a perfect ski for skiers who are ready to explore more challenging mountain terrain. And then we have Peak Master. This is for the advanced high performance ski person, enabling the advanced rider to push their limits on steep and challenging terrain. It provides excellent float in snow and stability in deeper powder conditions. So again, with touring skis as well, we have three products: Peak Glide, Peak Rise, Peak Master. I would recommend you to know the names of the product under each category so that you are aware. Let's say in the exam they're telling you, okay, the Peak Master is now being discontinued, for example. Straight away there should be a light bulb in your mind. Okay, Peak Master is for advanced high performance people. Maybe there are less people interested in touring, that is why they're shutting it, for example. But that light bulb has to quickly come. And how will this come? Again, this pre-scene analysis is not a one-time thing. You can't just go through it once and expect yourself to remember everything. I myself go through the pre-scene analysis 7, 8, 10 times before we make questions for you, so that we can identify the key areas which will be tested in the exam. So I would recommend all of you to go through my pre-scene videos at least 2 to 3 times. And then the PDF that we give you, which is part again of our full paid courses only, read that PDF. Everything that you see on your screen is converted into a simple PDF for you to read. Keep reading so that important ideas, important aspects you remember. And see, this is not a remembering game because you won't be able to remember everything. It's about going through it as many times as possible, because you always remember your favorite movies. How? Because you keep watching them. Do the same for the pre-scene. Keep going through it, keep reading it as many times as you can, so that when the time comes, that light bulb happens, just like I gave you an example. Now over here, I want to discuss an important topic, specifically linear programming. Now, limited capacity, they might tell you that, okay, this month, or let's say for the next 6 months, we are going to receive limited, let's say, wood with which the ski base is made. So we need to decide the optimum mix of Peak Glide, Peak Rise, Peak Master skis so that we maximize contribution. And for this reason, they have created a linear programming chart and given it to you. You should be able to read the limiting factors. You should be able to read the optimum feasible area. You should be able to read the optimal production plan. All of this you will be able to if your LPP revision is on point. Those who are following my revision course will be able to quickly grasp this. When we do mock questions in the next stage, you will also be able to test your knowledge on this and see how it comes up in the exam. So foolproof study pack is what you will get if you are studying with us on our paid courses. Again, I'm considering F1 also, non-current assets held for sale. If SumTrix decide to discontinue an underperforming touring model, they might tell you that, okay, we need to sell this asset. Same way, events after the reporting period, IS10, significant post-year-end snowfall changes or safety issues could affect reported sales or valuations of touring skis. Tax reliefs also, R&D on advanced models may qualify for tax incentives. The government often has tax breaks, tax reliefs, tax incentives. You should be aware of them. We'll discuss taxation more in detail, at the end of the pre-scene, where a full tax aspect has been given to us. But because we are speaking about R&D, I thought we'd include it. Third product category for us is custom skis. Now we also manufacture custom built freestyle and touring skis to order. These are skis built to a specific individual requirement. Our custom skis are popular with professional and semi-professional riders and some amateurs as well. Ski accessories as well as skis, we know now from the earlier analysis that accessories, specifically poles, helmets, goggles, gloves, other clothing, is 45% of the market. So we are constantly updating our ski accessory range to showcase the best of technology and design, and it might be a consideration that we start producing them rather than buying them like we are doing right now. So, throughput accounting. With custom skis, production is often bottlenecked by labor, machine time. So, throughput accounting can help prioritize whether scarce resources should be allocated to custom skis or continue with our mass production of freestyle or touring skis. This I see as a very realistic exam situation. You get a 50 custom ski order, let's say for example, but for a full company. But because of this, you will be able to produce less touring skis. They'll give you the throughput table. You will have to see, okay, which product is giving you maximum throughput, and that is the product that we'll go with. This knowledge you should have from P1 because this scenario can come up. Same way, accessories likely sell year round, while custom skis are seasonal. So time series analysis can be applied to better forecast demand for each product to understand where, how much to produce so that I can meet the demand. New topic again, risk and uncertainty. Custom skis have unpredictable demand. Decision trees or expected value analysis can help assess scenarios, whether to invest in expanding this production capacity or focus on your accessory sales or focus on your other sales that we are doing right now. Now we are starting with directors. What is each person's competency? Now I feel this is a very important thing to know, because if you know what the people within your company are, or let's say the people who are running your company are good at, that makes a very key advantage in terms of understanding the company's values. And we already know, Julian, Felix, and Elena's major contribution to the business. But it will also be very important for us to know the other people who are in charge of running the business, because they will be the people in this small company, the way it's set out. Or let's say their core values or their background will be the one that is pushing the company forward. So I would like you to know the names of each director, and I would also like you to know what each director is good at or what each director is best at. I want you to know that. I want you to be able to recall that, so that again you can use it when the time comes in our mock questions. For example, if we are speaking about, let's say, design or developing something, you can say that, okay, let's take the input of Julian because he has a talent for design. This one line added to your answer adds great integration skills, showcases to the examiner that, okay, this person has gone through the pre-scene, has analyzed the pre-scene, so this person knows the way this company functions. Because you are working for SumTrix, remember that. So everything that you do has to be very much related to SumTrix, and the best way is to include ideas from the pre-scene within your answers to showcase this. So we have Julian Fisher, who is the co-founder, he's the managing director. He has the overall responsibility. With a degree in engineering and a talent for design, Julian is the creative force behind SumTrix's early innovative ski designs. He has now stepped away from the operational elements of ski development and manufacture to concentrate on leading the business. So he is the creative person, he is the talented design person. However, he still enjoys the creative elements of ski design and often works with Daniela Costa, who is the head of artwork, on inspirational new designs when he has the time. So he is the managing director, he overlooks the business, he sets the strategic direction for the business. His shift from day-to-day operations to leadership reflects moving from operational to strategic decision making. From day-to-day decisions, he's gone to strategy now. So that's design as a talent for Julian. Next, we have product development. Felix Schmidt, who is also the co-founder, is the technical mastermind behind SumTrix, and that is why he has been given the role of product development director. With a degree in engineering, specializing in product design and material sciences, he ensures every product puts the rider or ski experience first, because this is my core value. I need to remember that. Whilst confirming to the company's high commitment to environment. So rider experience plus sustainability. He now heads the company's product and development team. His focus is on innovation. His focus is on R&D. His focus is developing designs which will better the rider experience and commit to the environment. Next, we have Diego Santos. Joined SumTrix 3 years ago, bringing over 15 years of experience in operations management. He previously worked for a global outdoor gear manufacturer, scaling production and improving supply chain. See, this is going to be a major consideration for my business, because right now we are developing the second iteration of our touring skis. We might look to expand. So somebody who has the expertise of scaling production, improving supply chains, already as a production director, is going to be a key, key role for my business. At SumTrix, Diego oversees all of the production and supports departments, but delegates the day-to-day to production heads. So he's bringing his expertise. His role involves monitoring your material variances, your labor variances, all the production variances is going to be his job. Next, we have Elena, who is the third co-founder, who is looking at sales and marketing. So Elena uses her knowledge and experience of the ski market to build SumTrix's brand. She is the brand manager. Elena's connections with professional skiers and riders, coupled with her understanding of ski culture, have helped elevate the brand and current reputation. Elena is keen to use new technologies, including artificial intelligence, in marketing the brand. So she is the person who is doing the branding. She is using new technologies within marketing, and she's also using AI. She leads the company's sales and marketing team. So she is focusing on promotional tools, very important, and she's focusing on new groundbreaking tools as well, which is good. Next, we have Human Resources Director Anzu Chen. So Anzu has a background in outdoor sports, retail, and has worked for several of the larger ski manufacturing brands in various roles before becoming head of human resources. Relocating to Reland from a nearby country, also with a strong ski culture, she joined SumTrix 3 years ago. This is a very important note. Why? Because she has worked at ski manufacturers in HR in a different country. If we are looking to expand, maybe she has knowledge of that market, maybe she has knowledge of the HR policies in that market, which will help us. So her HR background in larger ski brands brings her expertise. So HR decisions have cost impacts. Ansu will also influence participative versus imposed budgeting through how staff targets are set. So she will be the person who needs to be the head when we are deciding anything related to employees. And one part of that is also budgeting, which is having a participative budget or an imposed budget, which we'll learn deeper into the pre-scene as well. Next, your finance boss is Marcus Green. He has overall responsibility for all finance related issues. He joined SumTrix 2 years ago, bringing over a decade of experience. Marcus likes to have daily oversight of financial issues. His expertise has helped the company maintain a healthy cash balance. So F1 cash balance is good because of the seasonal nature of our business. Cash flow management, working capital management, and key working capital ratios are going to be very important for us. So overall, if I look at the people who are running my business, these directors, I can say that they are well qualified, they have the experience, they are in the right job, and they will be able to push the company forward when the time comes. That is my feeling. I'm keen to I also want you to go through these directors, know each is competency, so that you understand, okay, if there is a gap, where is the gap? But majorly overall in the operational level, these directors are covering all the blocks, let's say, for being a successful company. After that, they've given us management in key departments. First, finance diagram has been given. Your finance boss is Marcus Green. Under him is head of finance Maria Thompson, under which you are one of the finance officers. So this is very clearly telling you that the structure is centralized with clear reporting lines. The decisions are made at the center. The decisions are made at the board level. So this links to your E1 organizational structure. So the finance director will focus on strategy. The head of finance manages the budgets, showing your responsibility accounting. And your finance officers bridge data, which is your role. Analyze all of the data and help the head of finance. Help the finance director. Helping is your job. So overall, it's a centralized structure. So your organizational structures from E1, having a centralized overview, comes to the picture over here. Same way, we have a sales and marketing discussion. So we have the director at top, divided into head of retail sales and head of website sales, showing that we have two main sales avenues. Again, this is centralized. It links to your E1 organizational structure. The sales and marketing director focuses on brand positioning, strategy, and market growth, learnt from her role description above. The retail and website heads manage channel operations, budgets, and performance, showing P1 responsibility. So retail, Anya is responsible for. Website sales, Fatima is responsible for. That's their responsibility. Variances in those departments will be her or their responsibility. Sorry. The structure shows how multi-channel sales will require us to have multi-channel controls. Different channels, different controls, different needs. So very clear for us that, okay, we have two major sales channels, the retail and the website. Each has their own head, which feeds into the overall marketing director. Next, we have product development, Felix at the top, and under him comes Hiroshi, who is head of R&D, and Daniela, head of artwork. Artwork is the design. So again, centralized structure. Head of R&D is Hiroshi, focusing on technical innovation and material science. This ties to P1, relevant costing. Whenever you are making a new research, new development, relevant costs are to be considered. For artwork as well, it relates to, because our artwork is so unique, it makes our skis stand out. It becomes our core competency, our core focus area. And always, whenever new products are coming up, new artwork is coming up, there is going to be risk, there is going to be uncertainty, there is going to be impairment, which needs to be tested from your F1 syllabus. IAS 36 comes into the picture over here. Now we have production. You'll see that production is a major department for us. Why? Because mainly we are a production oriented company. We have Diego Santos as the head of production. Under him, head of component preparation is Ravi. Head of assembly, James. Head of finishing and packaging, Leah. Head of custom skis, Stefan. Head of goods inward, Miriam. Good outward, Hannah. Head of facilities management, Yara. And head of machinery maintenance, Nicholas. All of these 8 people look after each activity within production and they report to the production director. So very clearly, again, we have a functional structure in place. Each function is one department. So this is the departmental or a functional structure. Different types of structures are discussed in E1, like divisional, matrix. Will be good to just have knowledge of that. Now, production director provides strategic oversight while heads focus on operational controls. This is very clearly a tall versus flat structure or a delegation situation, because director at the top and then there are lots of departments. So this is like, I will say a pretty flat structure if you look at it in an overall perspective, because everybody is relating only to the production director. He is making the final calls. So what I'm looking at over here is an important consideration from P1 again is, let's say, new products, so relevant costing coming into the picture, working capital coming into the picture because of the so many departments and so many processes the company is following. This was my breakdown of each department, showing you that overall we have a functional structure currently. After that, they're telling us extract from the employee induction manual. So what is a ski? Component parts and materials they are made from. So what is a ski made from? Now the key components of a ski are, first, the core. This is the center of the ski. It determines the maneuverability, flexibility, grip and weight. This is made from laminated wood, bamboo and maple in varying proportions. So your mix variance coming into the picture. Your material variance coming into the picture, because bamboo and maple are going to be 2 of your major inputs. Next, composite reinforcement layers. This surrounds the core, made from carbon or fiberglass, giving torsional strength and flexibility. So giving the strength to the center and flexibility. Cut from large sheets, glued and pressed with the core. Rubber between layers improves the bonding and absorbs vibrations. After pressing, skis are machine cut to shape. So first we take the core, we reinforce it with carbon or fiberglass. It's glued together and pressed, and then it's cut by the machine. So machine cut. Machine coming into the picture. So idle time variances coming into the picture, labor variances coming up into the picture, new materials, carbon, fiberglass, new variances, new complexity, new processes because the machine has come up. From your costing angle as well, coming up. Third, base, made from sintered polyethylene plastic. Sheets are purchased and cut to shape in-house. Now, one thing I'm thinking is, okay, we are speaking about sustainability, but we are using PTEX, which is polyethylene plastic. So is there a way we can change this material? We can, let's say, remove this material, add a new one, something to keep in mind. Heating and compressing powder makes the base more durable. Then the top sheet. This is made of nylon plastic, again plastic, protects the reinforcement layers and the core. Graphics are fused into it using heat and special inks. So now the graphic aspect comes up on the top sheet. Then there are sidewalls. These are made from ABS, which is a type of plastic again. It's butadiene styrene plastic. This provides a waterproof seal around the core. Half cap design. Composite layer curves down to meet the base. Top sheet meets ABS on the side. It's lightweight with good edge grip. So once the top sheet is added, your side walls are again added from plastic. Then there are edges made from stainless steel or carbon. So you're seeing there are so many inputs installed between the base and the lower composite layer for reinforcement. Last stages are number 7, resin. So the epoxy resin bonds all parts of the ski together. Paraffin based hydrocarbon wax applied with a hot iron after assembly to just keep it, smooth, shiny. And for touring skis only, strips of nylon attached to the base, providing traction for climbing uphill. So pretty much there are 9 things or 9 processes which go into making a ski. There are so many different components which are coming together. My suggestion is, again, know each area, not learning it. Just know, okay, core, this is what happens in the core. Composite reinforcement, this is where reinforcement happens, carbon, fiberglass, cut with a machine. The base, PTEX used. Top sheet, again made of nylon plastic, this is where the graphics are put in. And the side walls, again made from plastic. This provides a waterproof seal. It's lightweight. Then edges made from stainless steel or carbon. Then resin binds all of this together. Wax, final stage, applied with a hot iron. And if it's a touring ski, then strips of nylon attached to the base as well. So overall, I saw that there are different processes which are adding value. So for my value chain, there are multiple specialist inputs. Multiple inputs need to be put in which are adding value, like the epoxy, like the wax, like the carbon fiber, whatever you speak of. And because of this, supply chain management will be very key. If you don't have carbon fiber, if you don't have nylon, if you don't have plastic, if you don't have wax, then you can't carry forward these processes. So managing your supply chain will be very important. So your economic order quantity, EOQ, how much to order, becomes very important over here. E1 and P1 mix. If I'm talking of P1 specifically, your joint products again come into the picture, because shared inputs, your woods, are your shared inputs. Activity based costing, there are so many different processes, so many different costs are added in each process. Each process, if we want to understand the costs better, activity based costing will help us with the same. I've already spoken of variance analysis and risk throughout the process, but this is an important consideration. Also, inventory, your multiple raw materials complicate the valuation. Property, plant and equipment coming into the picture, because you have pressing machines, you have cutting machines, all of this can be impaired. You might need to buy new ones, you might need to sell old ones. So in short, the ski construction process highlights complex supply chains, costing challenges, variance challenges, and then asset issues as well, which we discussed. After that, they have given me extract from the employee's induction manual. So if an employee starts a business, starts a new role at your company, this is one of the extracts that that company will give to the employee for him to know the company in a better way. Because obviously if you don't know your company, you can't do well at that company, and then eventually you can't do well in this exam as well. So our freestyle and touring ranges differ in shape, or rather this induction manual is telling the employee about the production process for our freestyle and touring ranges. Because obviously the employee knows the process, he's bought into the company, he can understand the company in a better way, he can support the company in a better way. So our freestyle and touring ranges differ in shape, design, and some of the materials used. But the production process is common. Remember this, production process is common. It's only breaking off at the end. All our skis are largely handmade with the use of some machinery. So handmade, labor coming into the picture, labor costs, labor idle time, variances coming into the picture. How can we automate this is what we want to think of. Production for each model and size of ski is in batches of 50 pairs of skis at a time. So naturally it's going to be the standard costing system, because batches are being produced. It's not individuals, batches. So batch costing, standard costing is what our business is going to be using. Further on, when we go to the budgets, we will speak about this as well. So first we have component preparation. For components, we have so many different components. So first we need to prepare them. The first is collection. The raw material are bought in elements. For a batch of skis are collected from the goods inwards warehouse and checked to ensure they match the model and the size of the ski. Fine. Then wood cutting. The maple or the bamboo is brought in large sheets. These are cut to size using cutting equipment operated by a skilled technician who sets the parameters on the cutting equipment controls. So you collect, then you cut. Other components are also to be cut. Your sidewalls, your bases, your composite, your reinforcement layers, your rubber, your top sheet. All of this has to be cut from large sheets by skilled technicians. So your cutting equipment becomes very important. Your skilled technicians become very important. The design is transferred onto transfer paper and the cut nylon top sheet material is placed over this. The two layers are then placed in a dye sublimation machine which transfers the design to the top sheet. So design is taken, placed onto the nylon top sheet material. They are put in a dye together. The design gets transferred to your ski. All the components for a batch of skis are collected together, quality checked, and then transferred to the assembly department. So there are 5 stages happening in preparation itself. So preparation is preparing everything, then putting it forward to assembly. So overall, if I'm looking at it, technology is being used. Very important is that quality checking and transferring component data at stage 5 shows the importance of accurate and timely information. Good info must be complete, relevant. So information is playing a key role within our business, because all these 5 steps, if they don't follow good quality information and then pass it forward, it's going to be a big disaster within, let's say, production. Supply chain management again coming into the picture. If you don't have a good material requirement planning, your economic order EOQ method can be used for this. You won't have enough materials, then you won't be able to do these 5 processes and give it forward, causing delays. Now batch costing we already spoke of. Activity based costing is an opportunity over here, because each stage will have separate cost pools, separate drivers, which will help us understand costs in a better way. And because there are so many stages, the bottleneck can occur at any stage. Let's say you have limited skilled technicians, limited time on the cutting machine. These are all bottlenecks. So throughput contribution per unit becomes a very important key performance indicator or a key indicator measure for this business. Now, because we are holding so many large sheets of wood and large sheets of plastic, everything is being cut. This is all inventory which you are holding. If you are wasting it, your inventory valuation will have to be treated accordingly. If it's scrap, it's excessive inventory valuation. Because so much is invested into your goods inward, then your working capital is being affected. So because of this discussion, so many topics and so much about our company we learn. That's component preparation. Now let's go to assembly. So we did all the initial stuff where components were being prepared. After 5 stages, it goes to assembly. First stage is pressing. All ski layers are assembled using sandwich construction. This involves building layers including the top, the base, the edges into a mold specific to each model and size of ski. There is a mold which is specific to each model, size of ski. Bottleneck is very clearly visible. Resin is applied to bond layers using a press for 15 minutes to seal the layers together. Each press can press 2 skis at a time. Once a whole batch is complete, these are transferred on a trolley to the next process. Very clearly, this is our bottleneck process which I am figuring it out. Second is grinding and polishing. The excess resin is cut away and the base and the size ground to create the correct angle and a flat surface on the base. The skis go through several grinding stages using a belt with a stone grinder using skilled labor. Layers of polish are applied to each ski. So pretty much once everything is pressed, it goes to grinding and polishing, and then the last is testing. The camber and stiffness of each ski is tested using a combination of robots and experienced technicians. This is good because it's related to total quality management. All elements of the skis are measured and then they are paired together for transfer to the finishing and packaging department. So if we look at Porter's value chain from E1, all of this sits within operations. Again, quality is key, and that is why the testing process is being highlighted over here. Batch costing, activity based costing, we have already spoken about it. One new topic I'm speaking about is risk and uncertainty. Now the testing stage highlights uncertainty around the defects and the rework costs. Using Maximax, management might push higher output assuming defects stay low. With Maximin, they would focus on minimizing worst case quality failures, and a payoff table could be created. They might create a payoff table for this and they might ask you, according to Maximax, which production decision will you go with? According to Maximin, which production decision will you go with? Minimax regret, which will you go with? This is a common exam situation. So your knowledge of how to read a payoff table becomes very important. Your risk related decision making from P1 again becomes very important. From F1, we are speaking about a key topic over here, IFRS 16 leases. So if pressers, grinders or robotic testers are leased rather than purchased, your right of use of asset would have to be recorded, lease liability would have to be recorded, your expense, your interest expense would have to be recorded. How does lease recording work? Initial measurement, subsequent measurement from IFRS 16. Key exam scenario again, which we got to discuss. Last stage is finishing and packing. Finishing means binding and tip protectors are fixed to the ski. Final quality checks are conducted. The skins are added for touring skis, your stage number 9 in your process. For touring skis, the skin is added. Final finishing and packaging. The steel edges are oiled, ski bases are waxed, and then each pair of skis is wrapped in polythene and boxed, again plastic, and boxed ready for shipping to the customer or our retail partner. All boxes of skis are then transported to our goods outward warehouse. So very clearly, looking at the current situation, we do not have a just-in-time system, because we are storing in inventory, we are storing finished goods. So just-in-time system does not exist, which could be something that we look at. Soon as inputs come in, they go to manufacturing. As soon as they are manufactured, they go to our retailers. There is no inventory which is held in JIT. It's a subset of total quality management. So just a consideration which came to my mind. So again, very clear, very clearly, this quality is the focus for us, because every aspect is focusing on quality checks, and we do not want to compromise on that. If I'm thinking about IS 10, events after reporting date, if quality issues are found just after the year end, they may require adjustment. So your events after the reporting period also becomes important over here. Same way, warehouse, packaging machinery, finishing machinery is leased, where IFRS 16 comes into the picture. Now, one often aspect which I consider is outsourcing. Why do I need to do the packaging? Is packaging my core competency? Many companies outsource the packaging altogether. This would help us remove the plastic which we use, and an expert would use maybe sustainable materials to help us do it in a better way. So your relevant costing, outsourcing becomes a consideration for this stage, because I don't think this is our core competency. It can help us improve sustainability as well. So outsourcing I'm considering over here. Next, other information about company operations. Production facility is what we are speaking of first. So SumTrix makes its skis at its production facility, obviously. All skins in the freestyle and touring ranges are made in the following production departments. Component preparation, we have already learnt about it. Assembly department, we've already learned about it. Finishing and packaging, we've already learned about it. So any ski it may be goes through these departments. This is what we need to be clear of. If I'm overall looking at it, one topic that's coming to my mind again is activity-based costing and budgeting, which we have not discussed, specifically budgeting. But for activity-based costing, let's say there are different departments. So there will be batch level activities, unit level activities, which if activity-based costing is used, helps us understand the costs in a better way. Because we have these different stages, different departments, zero-based budgeting could be used. So often an exam situation or scenario. Because different departments exist, a zero-based budgeting system could help us budget in a better way, remove extra unwanted costs. Moving on, custom skis are made to order in a separate production department. Custom skis is altogether different department. It's called the custom department. It's the same process, but these all take place within a dedicated area of the facility. Same processes but repeated in a different space of the facility. Because it's custom. All the details, all the numbers, all the designs will be custom. You can't make it in batches. Your original production template is for 50 units, 50 skis together. Custom is 1, so it needs to take place in a different facility. The 4 production departments are supported by 4 support departments. What are your 4 production departments? Very clearly, preparation, assembly, finishing, and then we have a custom department as well. This is supported by goods inwards. all the inward material that we buy happens over here. Goods outward, once everything is ready, goes out to the retailers, website sales from here. Facilities management, responsible for management of the buildings, the security, the facilities throughout the company. And fourth, machinery maintenance, because we have so much machine, pressing machines, cutting machines, all of these machines we have, they need to be maintained. So overall, I feel if I'm speaking about the custom department, then custom department definitely to start with can have activity based costing because it's a smaller department, a smaller controllable size, and then if it works well for the custom department, we can roll it out for the entire organization. Support functions are critical because goods inwards, good outwards. Good inwards deals with your IS2, good outwards deals with your working capital because everything is tied up until you sell. Your money is tied up until you sell your skis. Facilities management and machinery maintenance is tied to IS 16, property, plant and equipment. Together, all of these 8 departments make sure that the company is functioning smoothly. So first, we learnt about production facility. Second, we are learning about purchasing and suppliers. Where do we purchase from? Who are my suppliers? First thing is sustainability focus. We focus on people or suppliers who use recycled plastics and carbon fiber where possible to reduce environmental impact. This is my core competency. I have to stick to it. I have to be true to it. My wood sources are bamboo, which is renewable bamboo. If the supplier is cutting it, it's also planting it. It's imported from China. So your foreign exchange coming into the picture. Maple is also sustainable. Captures carbon, again imported from North America. All your inputs are being imported. Cost consideration. Local sourcing from Reland, we buy ski edges, binding plates, tip and tail protectors come from local sourcing. The remaining materials from Reland and wider Europe. Other materials also we are buying from Reland and from wider Europe. Accessories, the helmets, poles, gloves and goggles sourced from trusted suppliers, mainly Reland, on which we'll apply our branding and then sell it forward. This product range is updated regularly and end of line items sold at discount on the website. Payment terms are 30 to 90 days. Some suppliers provide bulk purchase discount, which we occasionally use. If there's a discount, we'll use it, we'll store it because we have a goods inward warehouse. So again, from E1, all about sustainability. From P1, we are speaking about relevant costing because you have the option to use a discount and purchase in bulk, or you have the option to purchase as and when needed, so less wastage. Again, importing bamboo and maple introduces supply risk, meaning decision tools like sensitivity analysis could be used over here. What happens if the price of bamboo goes up? What will happen to my costing? What happens if the price of maple goes up? What will happen to my costing? So sensitivity analysis has to be used over here from P1. Overall, 30 to 90 days credit terms tied directly to your payables and working capital management, affecting your liquidity ratios, your cash flow forecasting. Working capital management will be key, especially because it's abroad sales or abroad purchases that we are looking at in this situation. Next, we have sales markets and channels. What are my sales markets? We know there are two retailers and to customers. First, direct to customers is 39% of my revenue. Now, ideally, we should always be looking to be in direct touch with the customer because this helps us remove the intermediary, sell at a better cost, make a higher profit margin initially, or let's say as an overlook. So how do I increase my direct to customer sales is always something that you should be looking at. So this features an immersive shopping experience, detailed descriptions, high resolution images, and customer reviews as well, like any website. AI tools help customers choose the skis suited to their style and skill. So maybe there's an AI based chat box on which you can type what you need, and then the chatbot will help you choose the best ski. So good that AI is being used. You have online promotions regularly, discounts, and accessories and custom skis sold on my website only. This is 39% of my revenue. Retail sales right now is a much larger percentage of my revenue at 61%. So freestyle and touring skis are sold through selected retailers in Reland and Europe. We select the retailers. Customers value in-store experiences for ski purchases. So yes, you want to increase your direct sales, but not completely remove retail sales, because most customers will still like to go and check out the ski, have a feel, then invest, because this is highly a significant purchase. Retail staff trained by SumTrix to represent brand values and product features. Retail sales teams can grant discount to partners. So we have regular promotions on the website, and we grant discounts to our partners as well, which they will forward to the customer. Retailer payment days are 30 to 60 days. So retailers have to pay us in 30 to 60 days. Whereas we have to pay our suppliers on the last page within 30 to 90 days. So it's a good situation that we are in. We have 30 extra days to pay some of our suppliers, which eases my cash flow problems. Currently, we have no retail operations outside of Europe. North America expansion is under consideration. Why? Because North America is the largest market. We already know that. So maybe businesses looking at that to expand. Good. So digital marketing is being used, digital transformation is being used, because AI is used. Very important for sales to have KPIs which are directly related to, let's say, customer service. Because if the website is not able to service customers in a better way, sales will be affected. So let's say a KPI for the website management team could be number of customer queries turned into sales. So KPI is something that is specific, but it should represent the value of the business. If I'm talking of P1, then also expansion into North America being considered. So your incremental costs, relevant costs are being considered. So overall, if I look at my sales channels, majority is coming from retailers. A significant percentage is coming from website, which I need to take forward now, because that is going to give me higher margins naturally. Next is sales and production patterns. So first is seasonality, obviously. Skiing depends on snowfall, artificial snowmaking. European ski season is late November to mid or late April. So pretty much you are selling in these specific months, and some months building up to the ski season. So sale peaks are before and during the ski season. So you need to be ready for this. For production, custom skis are made to order. They follow the seasonal demand, obviously, because only when the season is coming, somebody will place a custom order. Freestyle and touring skis are produced year round. So obviously you are stocking them. New designs are launched in October, building up to the ski season, yes. And retailers get early access before the website release, so the retailers are also happy. And accessories are sold year round via the website. So very clearly what I am looking at is seasonal dependence on snowfall creates uncertainty in sales. Decision tools like your payoff tables, decision trees will help you, forecast. Next, budgeting techniques for bulk purchase discounts and variable supplier terms influence our procurement budgets. So rolling budgets, feed forward budgets, flexible budgets may be useful given volatility in demand and the raw materials, so many various raw materials that we are buying in from different parts of the world. Again, taxation, seasonal sales peaks concentrates profits into a short period, raising your tax planning and cash flow issues. So because of the seasonal nature, your time series, your relevant costing, budgeting becoming very, very important. Next, we have employees. So as of 30th June, we have 125 employees with majority in the production facility. So the production heavy workforce shows that operations are labor intensive, which we already know, requiring strong workforce. The warehouse inwards and outwards have 10 and 8, is lean compared to production, highlighting potential dispatch bottlenecks during peak demands because we don't have enough people in the outwards warehouse, so it could be possible. The head office covers admin, product development, support functions, but is relatively small, keeping your overheads low but will place pressure in terms of multitasking on the employees. You yourself as a finance officer will have to do multiple roles which are related to E1, P1 and F1, which we are very clear about. So workforce structure mirrors the value chain, inbound, production, outbound, as the value chain was when we went through the production process. Labor is the major product cost driver in production. Labor is going to be a very important consideration deeper into the financials and the budgeting when we go there, because majority is in the production facility itself. This is part 2 of the pre-scene, and I'll meet you in the next part now, which is the financial analysis. So part 1 was like the intro and the industry overview. Part 2 was all the details about the company, and part 3 is going to be the financials. As always, mock questions are coming up next for those who have signed up with us, are coming up next to help you understand how questions are going to be, how to write, what to write, how much to write, how these key topics will be tested. All of that is within our full course purchased only. Let's move on. So now we are on to part 3, the financial side of things, actually looking at the numbers, experiencing the numbers, because that is what is the backbone of any company. So it's going to be very important for us to understand the numbers. So first I will take you to the actual absolute figures that CIMA has released. And then I'll take you to my analysis on those figures, giving you a holistic picture. So again, be very comfortable with part 1, the introduction to the company, part 2, which is the operations of the company, and take this knowledge to part 3. All of this combined is going to help you write solid mock questions for practice when we get there, because we'll do 25 mock questions, and this is the knowledge, the practice that you'll carry to your final exam, because without practice, having that right mindset is going to be very difficult. So first, we have been given the statement of profit or loss. Very important thing to note over here is that the year ended is 30th June. So the year has just ended. It's been July, August, only 2 months since the new year has started. So this 25-26 year will end next year on 30th of June 2026. So it becomes very important for us to be aware of this year end, because they'll say, okay, we are buying an asset in October. How will the depreciation be recorded for the next year? So you should know that, okay, the depreciation will be recorded for November, December, January, February, March, April, May, June, 8 months only. For example, I'm saying. So you should know that the year end is 30th June, not December, or not any other month as well. So keeping that in mind, they have told us that the revenue of the company is or rather in 2024 was 13,250. We will look at the exact numbers that they have provided us. So exact same numbers that they have provided us, we'll try to make our analysis with that. So from roughly the revenue for 2024 was 13,250 and it has increased to 14,132. So if you are to look at it, from 13.25 million, it went to 14.13 million. So there has been an increase in revenue. Good sign, right? Because we know overall that the market is also growing. So it's important for us to keep growing in revenue as well. The cost of sales also went up. From 8055, it went up to 8518. Which very clearly shows that, okay, you sold more, so you would have had to produce more, so you would need more labor, more materials, and that is why the cost of sales has also gone up. But you will see that the proportion of revenue, when we go down below to the percentages, my analysis, I'll show you, but over here on the onset as well, it's very clear that the revenue has gone up by a larger margin than the cost of sales, which means that we were able to control our input costs in a better way. And that is why with revenue increase, cost of sales went up by a smaller percentage, and that is why I reported an increase in my gross profit. From 5195, it went up to 5614. So there is a good increase in my profit from 5.1 million to 5.6 million. Company is moving in the right direction. These are all encouraging numbers. Selling and distribution costs also went up. So it could mean that, okay, I because of my sales expenses, marketing expenses, I was able to sell more. That's why my revenue went up. But again, it's a small percentage increase. Admin also went up, not too much of an increase there as well. And that is why my operating profit went up from 812 to 930. So 812,000 to 930,000, my profit has gone up. So in spite of a small increase in selling and distribution, admin expenses, I was still able to showcase a growth in profit. From this, we'll deduct our finance costs from 118. It went up to 120. There can only be two reasons for finance cost increasing. One reason is maybe we took a new loan, that is why interest costs went up. The second reason can be the loan percentage increased. Up until now we were paying 6%, now we'll pay 6.5%. For example, I'm telling you. So there are two reasons why finance cost has increased. When we go to the statement of profit or loss, statement of financial position, we'll try to understand this better because over there they'll tell us the actual number of borrowings. So right now my finance cost has gone up, not too much of an alarm. But because finance cost went up by a small percentage, my profit before tax still is very healthy. From 694 went up to 810. I paid more income tax because obviously I earned more revenue, I earned more profit, I have a higher profit, so I got to pay higher income tax. So my profit for the year from 560 went up to 658. A good increase in my profit for the year. So from revenue, you see my revenue was 14 million. From that, I'm pocketing a profit of 658,000. So there are so many expenses, one by one, which get deducted, which leave us at 658,000 at the end. So overall, if I look at the financial analysis or statement of profit or loss analysis, it shows that from the past year, we have increased all of our metrics moving in the right direction. Now to make life easy for you, I have created a percentage analysis. I have created an analysis of percentages to make your life much more easier. This analysis, see, it's going to be very difficult for you to remember all of the numbers because there are so many numbers. So what I always recommend my students to do is, don't learn anything. I've said this multiple times, but I will want you to go through the pre-scene as many times as possible. Keep going through it, keep following it, keep reading it, so that some of these percentages, maybe one, maybe two of these percentages, or all of these percentages analysis which I am giving you will stick with you. And why does it need to stick with you? So that, like I said, you can use it in your mock questions with me, so that it becomes a habit for you and you can use it in the final exam, because this will give you integration marks and this will tell the examiner that, okay, this student knows this company. He has invested time in understanding this company. So it becomes very important for us to try to replicate these numbers wherever possible. So if you're writing something on expansion, new product coming up, start your answer by saying, okay, our revenue has increased by 6%, 6.7% roughly, or our gross profit has gone up by 8%. So this could be the next step for SumTrix, for example. If you use any of these percentages knowingly, in the right place, at the right time, I can guarantee you will get integration marks, because it will showcase your knowledge about this company. And I'm not asking you to mug anything up. It should come naturally by multiple readings. So revenue has gone up by 6%, cost of sales only by 5.7%. And that is why a healthy gross profit increase came up of 8%. Our selling expenses went up, admin went up, but revenue had gone up, cost was controlled. So overall, my operating profit had a great 14.5% increase. From this, my finance cost was a very minimal increase, 1.7%. So my profit before tax was still strong at 16.7, and profit after tax is also strong at 17.50. So the business is showing good growth in terms of profit and in terms of revenue. You can remember any one of these profit figures, any one of the revenue figures, and use it when the time comes to your benefit. Our effective tax rate has little bit gone down, not too much of a consideration even, because it's only 0.5%, which is gone down by. But overall I paid more tax because I made more profit. Our margin is good, our profit after tax margin is good. So overall the business is moving in the right direction with strong profit increases, plus a revenue increase, plus a cost of sales control, which has to be noted. So which means that my business has strong cost controls, because even though admin expenses, selling expenses, cost of sales went up, I'm showing healthy profits. So that was the profit or loss analysis. Everything that I spoke of is there on your screen as well in words for you to go through, for you to read, but I've already explained it. So again, what do we learn? We don't remember anything. We just try to understand, okay, this is my company's current position, these are my current profit percentages. So I know the future of my company, which is right now looking secure. Next, we are on statement of financial position, balance sheet analysis. Now, if I look at the statement of financial position, I am first going to start with the asset side. My non-current assets from 6120, property, plant and equipment, went up to 6235. IAS 16 from F1, there can be two reasons. New property, plant and equipment purchased, that's why value went up. Or second, there could have been an upward revaluation of the current assets. Two reasons, right? Let's keep this in mind. When we go to the cash flow statement, we'll try to figure out what the reason actually was. Current assets. My inventory from 1590 went up to 1672. Okay, increase in inventory, which means more cash tied up in inventory. Trade receivables. The receivables from 1023 went up to 1120. So again, more cash tied up because I have not received that money. Prepayments and other receivables. You paid early and other receivables also went up. Again, more cash tied up. Cash and cash equivalents, which means my cash in hand went up, showing that I have a strong cash position of 290,000 as of now in my bank account. So overall, the current assets have gone up, which showcases that more cash has been tied up from the working capital F1 situation in my current assets now, but nothing too alarming. Now let's go to the equity side, equity and liabilities side. Share capital 600 remained the same. My retained earnings from 3707 went up to 4159. What is retained earnings? Your profit gets added, right? So you made a profit last year, that's added over here. So your retained earnings have gone up, showcasing the business is moving in the right direction. Now my borrowings from 1950 became 1725. When in my statement of profit or loss, our finance cost has actually gone up by 2000. But in my statement of financial position, they are telling me that borrowings were paid out. So borrowings are paid out, which means you should be able to pay less interest. Over here, my interest increased. Why did it increase? Some loan might have been refinanced. Some loan percentage must have now increased. I need to be aware of the same. After that comes current liabilities. Short-term borrowings have remained the same, 225 to 225. Trade payables from 1503 became 1536. So okay, they went up. More liquidity. I held on to that money. I have not paid it out yet. Other payables also went up. More liquidity. I have not paid it out yet for this year. And the tax liability has also gone up because obviously we made more profit. We got to pay more tax. So nothing too alarming on the equity side as well. One thing that is missing over here, or rather I want to point out as an eye-opener, is our business is currently not using leases. IFRS 16, leases, the very prominent question in the exam. Often in past case studies as well, they would have, if a business takes a lease, you would see right of use of asset. In the non-current liabilities also, you would see, the lease amount that is pending. You would see the extra finance expense. None of that is visible over here. So it could be that, okay, from this year onwards, the company starts taking assets on lease rather than completely investing in assets or buying assets to protect its liquidity, so to protect its cash. So leases is looking like a very realistic scenario because of this current situation right now. Now to my statement of financial position analysis for you. Again, the major numbers have been analyzed for you over here. I will not ask you to learn everything, remember everything, but try to use some of this when the time comes in the right position, let's say. So ROCE from 0.13 became 0.14, which means it's a good sign that, okay, the business is a good investment for anybody who's wanting to invest. The business is going to give you a positive return if you invest in the business. So that's a good sign because shareholders are worried about this, owners are worried about this, people who are investing in your company are worried about this. If you are not paying back on the capital of the people who have invested in the business, nobody will want to invest with you. So that's a good sign. From 0.13 it became 0.14. In questions relating to new product expansion or let's say marketing of the company, you can say that we are a strong company already because our ROCE has gone up from 0.13 or 13% to 14%, which is a good sign for anybody wanting to invest or looking at the future of our company. So these subtle ways you can include these numbers, you can include this information, you can include this discussion that I am making with you within your answers and get those extra marks. This will come with practice. The more live lessons that we do, more discussions that we make, the 25 mock questions that you do with me at FinTutors, all of that will train you to use this. Next, non-current asset ratio is also increasing. Why? Because our revenue went up. Non-current assets also went up, but revenue went up by a larger percent. So this is also a good sign for the business. Now coming to the liquidity. Current ratio and quick ratio are very important in terms of liquidity, and liquidity is an often asked question from F1. So what is the current ratio? The current ratio is current assets upon current liabilities. So ideally you should have 2-part current assets to 1-part current liability. So if your current liabilities are 1000, your current assets should be 2000. As a good measure, it should be 2:1. In this situation, let's just look at the financial statement and you will see that your current assets total is 3207 and your current liabilities total is 2958, which means they're pretty much equal. This is not a good, healthy measure of liquidity according to the brackets which have been set, according to the rules, or let's say the followings that have been set. So ideally, the current ratio and the quick ratio indicate the liquidity of the company. A ratio less than 1 would indicate that the company does not have enough short-term funds to cover its short-term expenses. In this case, our liquidity from 1.05 has become 1.08, negligible increase. If it goes below 1, then there is an absolute problem, which means liabilities are more than the assets. Currently, that is not the same. They are pretty much the same. We should try to increase our current assets in as many ways possible, because that, while controlling the current liabilities, because that would take us closer to the ideal ratio of 2:1. Same way, quick ratio is current assets minus your inventory upon current liabilities. Here the rule is 1:1, which means if you remove your inventory, your current assets should be equal to your current liabilities. So this has also from 0.48 gone up to 0.52, but far away, it's pretty much half of where you want to be, because the ideal is 1. So liquidity is going to be an issue if current liabilities demand early payment. If your current, let's say your receivables are not going to pay you, but your payables are asking for the money, where will you pay for it? You are already short of cash. So liquidity management for this business is going to be key. See, this will not come to you in one shot. You have to listen to my explanations twice at least. You'll have to read this analysis 4, 5, 6 times at least. Then these numbers will start talking to you. You'll start making sense of everything. But that time will have to be put in from your side. I'm able to explain them effortlessly because I've gone through it. Return on assets also went up. Gearing has gone down. Why? Because part of the loan has been repaid. We saw that in our financial statements. So we do have debt capacity, which means if you want to expand, there is a possibility for you to take loans because that capacity exists. So this was our statement of financial position. Everything that I spoke of again has been mentioned in words over here for you to read, for you to follow at your own pace as well. Now to the statement of cash flows, cash situation. If I look at the cash flow statement, obviously those who have done their revision from F1 will know that the cash flow statement is divided into three parts: your operating activities, investing activities, and financing activities. We'll start with the first section. You start with your profit before tax, and you will add back your non-cash expenses. So your depreciation added back, finance cost added back, and the profit on the disposal of property, plant and equipment is subtracted. You get the total of 1046. So if I look at the total now, I had 810. I adjusted my depreciation, added back, finance cost added back, profit deducted. So the total of this is 1046. Again, movements in working capital is adjusted. Increase in inventory is subtracted. Why? Because more money is tied up in the inventory. So money went out. Subtracted because more money is tied up in inventory. Increase in trade and other receivables. Again, I have to receive that money. I have not received the money. So it's a negative calculation. It has increased. I have not received that money. It's a decrease in my cash holding. So minus. Increase in trade and other payables. Over here it's payables. This increase is added because you held back that money. You have not paid it out. You held back that money with you. So the total of this comes up to 50 negative. So 810 plus 1046 minus 50, your cash generated from operations is 1806. From this, your actual cash expenses, taxes paid, interest is paid. Okay, so your net amount 1552. Positive. So net inflow from cash from operating activities. Now investing. You purchased property, plant and equipment. So this will be negative. Disposal of property, plant and equipment. So money came in. This is positive. So purchase amount negative, money went out. Sold, money came in. Your total is 1041 negative. Now very interesting note over here is property, plant and equipment was purchased worth 1.167 million. And the one that you sold was 126 million. 126,000. If I go to my statement of financial position, you will see that from 6120, its current holding value is 6235. So over here, the increase is not that much, which means the machine that you sold out would have been impaired, would have lost its value, or would have been depreciated gradually. That is why the value went down. And then you purchased assets worth 1.2 million roughly, and your total is still 6.2 million. So assets currently would have been depreciated or impaired or something happened. That is why value drastically went down. You purchased new assets as well. And that is why overall your asset calculation has gone up. Making sense? That was your investing activities outflow. Now financing activities. Dividend paid to the owners. Dividend has to be paid out. This is their income. So dividend paid, money went out, 206 negative. Borrowings have been repaid. Again, money went out. So your cash flow is again negative over here of 431. So you had positive operating, negative investing, negative financing. Total comes up to 80 or 8,000. $80,000 R dollars. So 80 and then 3 zeros, sorry, 80,000 R dollars is your current cash increase in cash. At the start of the year, you had 210,000. To that, you add your 80,000. Your cash equivalent at the end of the year, which is shown in the balance sheet, is 290,000, which you'll see in the balance sheet as well. This is my cash position. So overall, I can see that investing cash has gone out, financing cash has gone out. This is something I got to keep in mind. The same thing I have explained over here as text for you to read as well. After that, we are moving to budgeting information. This is quite interesting because budgets are, tell us about, see, up until now, we were actually doing overall, let's say, financial reporting, which were all financial statements which are compulsory to produce. Now we are going to budgeting information, which is management information for within the organization. Financials are what you show. Managements are what you create so that you can make better decisions for your business to improve your next year's financials. Because this is budget information for the next year. So when you prepare next year financials, you want them to be better, and that is why you are doing all of this budgeting, forecasting from now itself. So this budgeted gross profit is what we are looking at first. Remember, this is for the future. This current year that's running, this is budgets for that. So, okay, they are assuming that the gross profit will go to 6,203 from a sales revenue of 15,036. So overall, currently, what is your revenue going up again? It's 14,132, 14 million. What are we expecting our this future current year's revenue to be? 15,036. 15 million is what. So we are expecting further revenue growth in this year as per our projections. So something which is again a positive sign for the business, that okay, we are looking forward to growth in this year as well. That's one thing that we take away from here. But overall, the margins are also remaining strong at close to 40 to 50% for the products which we are producing, which is very good for me. So overall, if I try to look at it, which is the product which I'm selling the most, which is giving me the highest revenue? Freestyle skis at 9.9 million, right? This is giving me the highest sales revenue. But the most profitable product for me is custom skis at 383,000 because it's giving me a profit margin of 50%, which very clearly means that the product which I'm selling the most is not my most profitable product. It's giving me a healthy profit at 43%. But the way I can increase my custom ski sales is what I need to look at, because that is generating highest margins for me. If you look at the margin, first comes custom, then comes freestyle, then comes touring, then comes accessories. So first thing is the product which I'm selling the most is the product which is giving me the second highest profit. So how do I increase the profit of my highest profitable product? Custom skis is what I want to think of. Secondly, accessories, I'm currently buying, branding and then selling. What if I now start manufacturing? Can this gross profit from 30% go up to 40-45%? Because that's the gross profit range of other products as well. So the buy decision comes up into the position over here, and maybe for this we lease new assets. So your leasing also can come into the picture over here. Let's say you don't have too much cash on your hand, so you want to lease so that you can start manufacturing, let's say, poles or helmets or boots for this coming year. It will give us a revenue push, plus it will give us diversification. So just something to think of. It's coming off my mind. If you see revenue contribution, 66% of the revenue of my total revenue is coming from freestyle. It's my highest selling, most important cash cow product. Then comes touring skis, then comes custom, then comes accessories, at 13%. And custom is a very small percentage at 2.5, but it's my most profitable product. So we expect freestyle to contribute 66% of the total revenue. Custom is the most profitable. These are my two major takeaways from here. Next, I have specifically looking at each category. First, we are looking at freestyle sales revenues. This is my freestyle range. I already know that I sell 3 products: glide, flow, and force. Glide for the starters, flow for the, let's say, intermediate level, and force for the most advanced freestyle experience. Let's first look at volumes. So if I'm looking at volumes, this is pretty much telling me where I'm selling, how I'm selling rather. Distribution volumes. Out of the total, let's first look at the total. I'm going to sell 16,000 freestyle skis. Out of this, 12,000 is going through retailers. So pretty much 75% of my revenue is going to come from retailers. So retailers become major partners for me. Website is selling the other 25%. So first thing over here is, how do I increase my website sales? Making my website better, big data, data analytics, using my website data to serve my customers better so they buy it online, because that's obviously going to be better, cheaper, more accessible for us. And second, how do I manage my relationship with retailers in a better way? So overall, we are expected to, out of my total 16,000 freestyle skis that I sell, 45% are going to be Summit Glide, which means that is my most selling product. Within the freestyle range, the most selling product is Summit Glide. Then comes, most selling product is Summit Flow at 7,200, and second becomes Summit Glide, and third becomes Summit Force. So in the freestyle range, my highest selling product is Summit Flow at 7,200 units. And Summit Glide comes second, 5,400 units. Summit Force comes third at 3,400 units. So what have we learned so far? 75% of the sales coming from retailers, 25% from the website. Highest selling product in terms of numbers, units, is Flow, then Glide, and then Force. Let's look at the prices now. If you look at the prices, your most highest priced product is Force. Then comes Flow, then comes Glide. So your middle level product, which is having a little bit of a higher price than the entry level product, is the most selling product for you, because Flow is what you sell the most. Now if you see the price to retailers, you are selling at 611.15 if we speak of Summit Flow. Why? Because obviously you want retailers to earn as well. You are selling them at 611. The retailer will then put his own markup margin on top of that and then sell it to the customer. On the website, you are selling it for 719, which very clearly means if you make a website sale, it's much more advantageous to you. It's close to $108 better for you because that money is completely coming to you. Over here you are paying to the retailer a cut. So increasing my website sales from 4,000 units has to be a key consideration for our business. So again, for Summit Glide, going through the numbers, 492 for retailers, 579 for website. Summit Flow we've already discussed. Summit Force is 738 for retailers and 869 on my website. Last, coming to sales revenue now. This is obviously your volumes that you sell multiplied by the price. So if you do 1350 into 579, you'll get 782,000. 4050 into 4050 into 492, you will get 1.993 million. So overall, the units multiplied by the price is giving you your sales revenue projections. If I look at my revenues, the highest revenue is going to come from Summit Flow, so it becomes my major product that I look at. Okay, freestyle as a category was very important for me. But under freestyle, Summit Flow is very, very, very important for me. Then comes Summit Glide, then comes Summit Force. So out of my total revenue, Summit Flow is going to give me 46% of the revenue. It's a very important product range for me. We have to nurture it, garner it, save it, increase it, while trying to increase the contribution of Glide and of Force as well. So everything that I spoke of in my analysis is given to you over here in words as well. So when you read through the document, you will also have an understanding. Now, freestyle, cost of sales budget. The earlier one was your revenue budget. How much you will sell, what will be your sales revenue, that budget, that projection. Now we're coming to the cost projection. Very important from the management side. You are a finance officer, remember that. So we'll start with the total sales volume, 16,000. Now, average cost per unit is being given for us. One unit is a pair of skis, remember. You can't sell one ski only. You have to sell a pair of skis. So, cost per unit is given to us. Let's look at, as an example, we'll take Summit Flow for discussion purposes because that's our most important product. So the raw material for Summit Flow is $100. The labor is $108 more than the raw materials, which means the materials that you are buying from outside is cheaper than the labor hours that you are paying to your people working on that material. Ideally, in a modern environment, it should be that, okay, raw materials are expensive, but then you should be using world-class manufacturing techniques where machines are involved as much as possible, so your labor cost is less. But over here, labor cost is high. This is very true though with the values of my company, which is high quality craftsmanship, all of that is adding to the labor cost. Variable overhead is coming up to 29.91. So this is your variable overhead expenses in a business. Your variable overhead expenses are pretty much driven by activity. So let's say they are driven by your production or your sales volumes. Your next line is fixed overhead. Your fixed overheads are a biggest percentage for you at 119.59. So 119, this is, if you look at the costs, the highest cost for your business, because this is coming at number 1 in terms of the cost hierarchy. So this would be your fixed overhead. Let's say your fixed overhead costs are your rent, your insurance premiums, your salaries for your management staff, your property taxes, your depreciations, software subscriptions that your businesses may have. All of these are fixed, but they are overheads. They are your overhead costs. Now if you look at your total cost of 358 for Summit Flow 1 unit, major is fixed overheads, then comes labor, then comes raw material, and then comes your variable overhead costs. This is the same trajectory for any product that you pick up. Any product that you pick up, your fixed overheads are highest, then comes labor, then comes raw material, then comes variable overheads. Which means that there is a major scope of controlling my costs in the overhead department plus the labor department. How can I control my costs in the labor department? Maybe by having more and more precision machines. How can I control my costs in the fixed and variable overhead department? By understanding the costs in a better way. This is a direct indication that better costing techniques may be needed to understand these costs better and to control these costs better, because over here they are only telling you fixed overhead, but how much is salaries of management staff, salaries of security staffs, rent, your water expenses, for example, how much is that? There is no breakup. This is a very clear indication that currently the business uses standard costing, absorption costing, which they'll tell us deeper on as well, so we'll discuss it at that moment. But right now, raw materials is a very small component. Direct labor costs are vary considerably between models from 100 to 121 in Summit Force, indicating advanced models require more skilled labor time. Very obvious. Fixed overheads is the largest component, suggesting fixed cost absorption in manufacturing. So overall, the cost structure is 33 to 34% fixed overhead, 30 to 34% direct labors, 25 to 29 raw material. Like we said, majority of your cost is going into fixed, direct, raw material, and then variable overheads. So if I'm looking at it from the P1 topic discussion perspective over here, the fixed overhead costs, is your major cost allocation. Cost apportionment and absorption rates are crucial over here, so that there is proper absorption, not under absorbed, not over absorbed, so that you can cost your product in a better way. Over here, activity-based costing makes sense, like I said, because different models consume different overheads differently. ABC is highly recommended in this situation because fixed overheads are very high and currently absorbed at a broad level, which are difficult to understand. ABC links overheads to actual activities and cost drivers, ensuring complex product, like Summit Force, let's say, bear a fair share of costs for setup, testing and design, because it's the most, it's our most, let's say, highest costing product. So more advanced product obviously takes more time, more management time as well, more space of the floor as well, so more rent should be allocated accordingly. All of this is possible if you have objective cost drivers, which is only possible under activity-based costing. So a shift to activity-based costing or a shift to marginal costing from your current absorption costing is a very favorite exam question that does tend to repeatedly come up. Same way, variance analysis is a very common question we've already spoken about it multiple times. And because you have so many different products, multi-product break-even analysis could be important for us to figure out which product to prioritize, which product to not prioritize. This brings in your multi-product break-even chart, which we've also spoken about in the past, but just giving you a overhead over here, because overhead idea, let's say, over here, because it's relevant. Now to gross profit analysis of freestyle only. So up until now, when we did this analysis, we first started with the budgeted gross profit, what the budget is going to be of the entire business. Then we did the sales revenue analysis, where summit flow is key for me. Then we did the cost of sales analysis, where accurate allocation is going to be key. Now we are coming to the gross profit analysis only for freestyle. So margins are highest for summit force, but I'm selling summit flow the most. I already know that. So how do I increase the margin? Controlling my cost of sales. How do I increase the sale of summit force? This is something that we will have to look at. And this has been explained in my analysis over here again for you to read. This is the freestyle product complete budget breakdown for you. We did the analysis for our freestyle range. Now we'll do the analysis for the touring range as well. So in touring as well, we have three kinds of products: peak, glide, rise and master. Again, the mid range, which is peak rise, is the one that we sell the most. 2100 out of 4750. So peak rise will contribute almost 45% again of our revenue. Then comes peak glide at 30%, and then 25% remaining goes to peak master. So when we look at the sales volume distribution, we expect 75% of the total revenue to be sold through retailers. Again, 25% on our website. So again, retailers are very important player for me, a very important consideration for me, because 75% of my total revenue is pretty much coming from retailers. But the price that I get, or the price that I sell my products to the retailers for, is significantly lower, $90 to $100 lower in some cases, than if I sell it on my website. So website sales are much more profitable for me. Our prices are discounted approximately 15%. Like I said, absolute numbers $90, $100, but 15% up to discount if I sell it to retailers rather than if I sell it on my website. So overall, again, peak rise is the most selling product, retailers is the most selling channel. If you look at the price, there is a 15% difference in the price consistently between the price that I sell to retailers and the price I sell it on my website. Sales revenue by product, peak rise contributes largest share at close to 43% of my total revenue. Then comes peak master. Then comes peak glide. Interesting over here, because peak master is my lowest sold product. I sell only 1200 units, but I get the second highest revenue from it. By selling 1200 units, I'm getting 851,000 of revenue. I sell 1450 units of peak glide and I get only 668,000 in revenue, which very clearly means that peak master is a high quality product, a product which takes time, a product that is why we are charging a premium for. It's a premium product. So overall, despite peak master having lower unit sales, it generates 31% of my revenue due to its premium pricing, with average selling prices 20% higher than peak rise and 27% higher than peak glide. So even though it's my second most selling product, 31% of my revenue is coming from it. So the touring range shows clear price segmentation. We have seen the difference. A 54% premium if I compare it to my freestyle range. So if I compare it to my freestyle range, there is a huge premium. If I compare it within the group itself, if I compare peak glide and peak master, the sale price is much higher, 519 and 799. You'll see there is a huge difference, a 50% difference in the price itself. So peak master is an important product for us. Even though it sells less, the revenue that it gives me is high. Now coming to the touring cost of sales. So again, cost of sales, I'll pick my most selling product, which is peak rice, raw material at 97, direct labor at 100, variable at 27, fixed overhead at 110. Same trajectory being followed. Majority of my cost is fixed, then direct labor, then direct raw materials, and then variable overhead. So I'll go through the analysis with you. This time what I did for freestyle was I explained it in my own way, and then there was text for you to read. Both are the same. This time I'll read the text, just making sure that everything is being covered. So the table shows the expected cost structure for 4750 units. Total cost of sales is 1.6 million. First, we'll go to cost distribution by model. Peak rise accounts for 44% of the total cost. Then comes peak master. Then comes peak glide. Even though glide is sold more than master in terms of units. But why is master more in terms of cost? Because obviously it's a premium product. The cost per unit increases with model sophistication. The cost for peak glide is 297, rise is 335, and master is 390. Why? Because entry level will be less products, less time. Your most sophisticated product, peak master, will obviously be a little bit more advanced. So advanced materials will be used as well. Raw materials are a small component. Direct labor is a large component and varies. Again, fixed overhead represents the largest cost component. Variable overhead remains the smallest component at 8%. Overall, again over here, it's 32 to 34% fixed overheads, 31 to 33 direct labor, 27 to 31 raw materials, and 8 to 9% of variable overhead. Same pattern that we saw in the freestyle range. So I got to make an analysis now. Total sales volume for the freestyle is 16,000. Over here it's only 4750. So overall, I want to make sure that I sell, if I look at the overall, let's say the total sales revenue, and when we go to the gross profit as well, we will see a very interesting thing. I'll rather just point it out when we get there. It will make more sense. But right now, touring range is sold almost 3.4 times less than the freestyle range. So freestyle range, higher production, higher economies of scale. Total cost of sales is much higher because obviously much more units. Cost per unit entry model is 317 Summit Glide, and for touring is 297. Touring entry level is 6% cheaper. For the medium product, freestyle is 5% more expensive. Just for a comparison, I put it over here. If you look at the fixed overheads, it's 110 to 134 in the freestyle range. For touring, it's 100 to 125. Freestyle has slightly higher fixed costs. If I go to the cost structure, you'll see it's pretty much the same. Like we already discussed, fixed overheads is the highest cost percentage. Then comes your labor, then comes your material, then comes your variable overheads. If you go to complexity, higher cost variation between the basic and the premium models, again 29%. For your touring, it's 31%. Both ranges show similar complexity, but freestyle is slightly more diverse. And overhead allocation risk, high due to bigger volumes and wide product range. If the overhead absorption is not done properly, there will be a problem. So freestyle is more prone to cost distortion. And if the major selling products, you sell 16,000 freestyle units, if costing is wrong, your pricing is being affected, your profits are being affected, everything will be affected. So to understand this better, activity-based costing is the need of the hour. And the same has been explained in this, pretty much implications that I have written down. And this table which I have presented for you is very clear analysis of the same. Now comes touring gross profit, just the gross profit aspect. If we look at the gross profit aspect, it's very clear over here that sales revenue highest is coming from peak rice, but the gross profit also highest is coming from peak rice, then peak master, and then peak glide. But the interesting part over here is that the highest selling product, peak rice, is not giving me the highest margin. Highest margin is coming from peak master, which is the lowest selling product in terms of number of units. So peak master becomes a key product for me over here, and peak rice becomes my cash cow over here. So overall, I am just making sure that gross profit margin improves significantly with model sophistication, and I try to sell the product with the highest gross profit margin, and I got to be aware of that. This has been explained in my analysis here. We also sell one other product, the custom skis. We got to discuss that, right? Custom skis is my next product range. You sell freestyle skis, touring skis, and you sell custom skis as well. So for custom skis, the average selling price is $1,700. It's an ultra premium product, significantly higher than your standard freestyle touring model, whichever model you pick. This is significantly higher because it's custom. Over here, your major costs become raw materials. You add your design costs, your direct labor, then your fixed overheads, then your variable overheads. So overall, the gross profit is also high, but the sales volume is also going to be low. So custom skis command 107% price premium over the highest price standard model. Summit Force is $869. Over here it's $1,700, almost double. Design costs represent a unique cost component over here, reflecting the bespoke nature. Your people will have to give your time designing that custom ski. Raw materials are also higher because premium materials, exotic components. Direct material is also higher. Why? Specialized craftsmanship, time, attention. Fixed overhead absorption, again also high, suggesting custom skis utilize your specialized equipment. So the custom skis segment achieves the highest gross profit margin across all product categories, with profit per unit being 2.4 to 4.4 times, almost 2x to 4x higher than any standard models, justifying the specialized approach that it has. So it's a very high gross profit making product for you, but it's highly priced. Last product category is accessories for you. We expect to sell 25,000 accessories divided into poles, helmets, goggles and gloves. Firstly, can we add more accessories? Can we start selling more things because the accessories market is growing fast? We learned in our industry analysis. Second, can we try to manufacture these in-house to increase our gross profit margin? We already spoke about this. If I look at the analysis, the table shows expected sales of 25,000, gross profit margin of 31%. Poles represent 36% of the total sales. Then comes gloves, then comes goggles, and then comes helmets. Poles at the top. Revenue contribution varies significantly. Goggles generate the highest revenue at 34.3%, despite only 20% of the sales units. So goggles, I sell only 5,000, but it's giving me 675,000 of revenue, which is making it 34.3% in terms of revenue generation. So if I look at goggles, they become a very important product for me because I sell them less in terms of units, but it's giving me a very high gross profit. So this analysis is important so you understand what products you can bundle, what products are not selling, So you can bundle them accordingly. What products are selling the most? So you can try to push up their value and increase the price. All of this analysis becomes very important, and that is why I have done this written down analysis for you. So first come goggles, then gloves, then helmets. Gross profit margins also vary dramatically by product types. Helmets achieve the highest margin at 40%, followed by goggles, followed by gloves, and the lowest is poles, which you are selling the most. So the accessories business operates on a buy and brand model with gross profits ranging from $6 to $50, indicating that we capture significant value through brand positioning rather than manufacturing, but a shift can be on the horizon. Shift can be considered. This was my budget analysis. Now they've given us a standard cost card. Just for us to further affirm it, what method is being used, if we don't already know. When analyzing freestyle summit flow, which is medium size, first the wood is taken. The standard price is 16. The quantity of wood is 0.55, so your cost comes up to 8.80. Same, we have plastic comes up to 40.80. Bindings come up to 24, other 22, packaging 4.50. Your total material cost is $100. Labor is apportioned on the basis of hours. So each hour is 1.60 multiplied by, each hour is $20. 1.6 hours is taken in component preparation. So 20 into 1.6, $32. Assembly takes 2.80 hours into 22, $61. Finishing takes 0.75 hours into 20, $15. Total comes up to 108.6. Variable production overheads are on the basis of direct labor hours only. So again, component preparation 1.60. There is no breakdown of the actual variable production overheads occurred under component preparation, under assembly, like setup cost, like inspection cost. None of that is present because obviously it's the absorption costing method. So again, multiplied by the standard rate, you get your total at 29.91. Fixed overhead also is by labor hours. Again, no further breakdown. 1.60 into 14.19, total comes up to 119.59. Your total production cost is 358.20. So everything, specifically the variable production overheads and the fixed production overheads, are based on labor hours, giving you this total standard cost of production, where you don't understand too much about what costs are being considered under what. But they've given us an important note. They say that standards are reviewed and updated annually. Every year the standard is updated. Naturally, 100% there is going to be a variance because the prices of materials, the prices of labor, the prices of other variable things keep changing. So there are naturally going to be labor variances, material variances, because the standard is only updated annually. Next, normal raw material losses are included in the standard cost of each product. So when you make a ski, let's say some part of the wood is thrown out, that is already been considered in your standard cost of each product. All direct labor overtime premium is treated as variable production overhead. Any labor overtime which is paid is treated as variable. And idle time is not budgeted for, which means you are assuming that all the working hours of the labor are productive hours. Is that possible in any factory, in any business all around the world? No. So there is definitely going to be idle time variance. There is definitely going to be your labor rate variance, labor usage variance, efficiency variance, whatever you want to call it. Production overheads are allocated and apportioned to production cost on the basis of direct labor hours. We already know that. Budgeted selling prices include an allowance for planned discounts and promotions, which is 15% to retailers. Further discounts which are being offered, the selling price already includes this. They are telling you that. Budgets are prepared annually on an incremental basis. So there is incremental budgeting system which is being followed. This obviously has its own benefits, its demerits. We have learnt in P1. This becomes a very important consideration. Different budgeting styles, your zero-based budgeting, activity-based budgeting become important. Operational managers have limited involvement in budget setting, they're telling you, which means it's a more top-down approach. The people at the top are telling the managers what to do and they have to follow it. So it's a more top-down approach, authoritative approach, and not a participative approach. Again, from P1 syllabus, styles of budgeting. First one was types of budgeting, different types of budget. This is styles of budgeting. Top-down approach, participative approach, authoritative approach. Over here, we have an incremental style, incremental method of budgeting, and the style is top-down authoritative. Overheads are big, we already know that. Miscalculation will hurt, so activity-based costing becomes, a situation to look at. All overhead is absorbed on direct labor hour. Standards are reviewed annually and include normal material loss. Only abnormal scrap, only abnormal losses that will happen will create your material usage variance. Labor rate variance uses basic pay. Overtime shows up in variable overhead that they've already told us. So any overtime that happens will affect your variable overhead variances. It will not affect your labor variance. Important point to note. Idle time is not budgeted for. So this will worsen. This will obviously be a variance because idle time exists in every business. Fixed overheads absorbed per direct labor hours. Production shortfalls cause fixed overhead volume variance, because if you don't produce, it's going to affect your volume variance. Higher output gives a favorable variance because more overheads will be absorbed if you make more units. So if you make more units, your overhead variance, your fixed overhead variance will become favorable. If you make less units, your fixed overhead volume variance only will become adverse. So your sales price variance also come into the picture because some promos are already accounted for, but any new promos that you introduced are not accounted for. Budget is incremental style. So, you need to consider your rolling budgets, flexible budgets, activity-based budgeting, zero-based budgeting. These are important considerations. So overall, we learnt about the entire budgeting system for my business. Now coming to the news analysis section. Now I have already created a foolproof summary for the news analysis section for you. I will quickly run you through it, but you have to very carefully read it word by word by word. My analysis is already done. My analysis is already created. I'm just going to quickly run you through it so you understand the important parts. But you have to read it through at your own pace, very slowly, very carefully, making sure nothing is missed. So let's start. The rise of the touring ski market. A new adventure for mountain lovers is the first news analysis article which they have given as part of the pre-scene. So they tell us that the article confirms that touring skiing is experiencing significant growth, driven by skiers seeking freedom away from crowded resorts. The sport requires specialized lightweight equipment that can handle both uphill and challenging downhill, with emphasis on safety. We already are focused on all of this. We are already there in the touring market. So this will be to my advantage. This validates my decision because 2 years ago I entered this market. I already have the right product for this market because I focus on quality. I already focus on high performance. That is why my products are highly priced. I already have a competitive advantage because my products are lightweight. I know that. And this further means that I have the chance to expand. Because of my brand differentiation, I have the chance to expand in this market. I am ready to tackle this market. So the first news article is all around touring skis, which is growing, which further shows chance of growing my revenue, which further shows diversification in the touring ski market will prove good for my business. Second, I have 5-minute interview by Elena Ritchie. So the interview with para skier Lena Hofer reveals the specialized nature of adaptive skiing equipment and its growing market. Para skiing uses customized equipment tailored to individual athletes' needs. So this is pretty much a custom ski with emphasis on performance, safety and comfort. The equipment is more expensive than conventional gear due to customization requirements. So this showcases the untapped market. I am already making custom skis. Can I make custom skis for para athletes? Custom skis are highly profitable for me. I know that. So can I make, this can be a product introduction for us. We already have custom ski manufacturing capabilities, which could be leveraged to enter the para skiing market. This will justify its premium price. We already have strong engineering backgrounds. We already have a presence in this market. So this could be an expansion situation for us. Next comes a focus on ski manufacturing innovations in raw materials. So this article outlines significant innovations in ski manufacturing, highlighting the industry's shift towards sustainable materials and advanced technologies. These developments aim to improve performance while reducing environmental impact, which is a key consideration for us. This could also be very important for us because we want to try to reduce our labor cost as much as possible, because labor costs are, let's say, a major cost for my business. So if I have more innovative machines, I might not need to incur those high labor costs. So this sustainability will add competitive advantage. It's good innovation. It's good, cost savings for me. That's the third article. And then at the end, we are coming to the tax regime in Reland, which is pretty straightforward. 25% tax, which costs are allowable, not allowable, tax depreciation allowance, pretty standard. But this opens up your F1 topics of taxation. And understanding tax depreciation and tax losses, which can be carried forward, is key from the F1 syllabus. For my students, we have an entire example attached for you. Tax depreciation, how it works, what it means for SumTrix. Tax losses, what it means for SumTrix and how it works. Present for you in one page as a summary, which again, I will want you to only read through. No extra analysis. All the analysis is done for you. And that brings me to the end of our pre-scene analysis. It was a marathon, but we got there. So now a very important consideration for you becomes to go through the pre-scene multiple times, not once, not twice. 2 to 3 times watch the video, 7, 8, 10 times read the PDF. The more you read it, the more you look at the numbers, the more you keep seeing the numbers, the more you keep seeing your, the more you keep seeing the numbers, the pre-scene discussions, the better you will understand the company, the better you will be able to use it in mock questions, and the better you will be able to actually showcase it in the final exam. That's the pre-scene analysis from us. Thank you.